Good evening, everyone. I hope my voice is audible to all of you. May I get a quick confirmation over the chat box. Am I audible to you? Just a quick confirmation on the YouTube chat box. Also, guys, if you're part of any groups related to advanced audit and assurance, please share this link on the respective group so that we can have as many people benefit from the session as there could be. Am I audible to you guys? That is great. Okay, so I have a lot of yeses now. So welcome you all to the AAA Grand Revision for March 2026. So I'm sure you guys are having the anxiety around the exam because advanced audit and assurance, okay, this paper is such a paper which is very difficult not to crack in the first go. So someone, if you see someone who has managed to pass this paper in the first attempt, you should ask for tips, because even if you're very good with your academics, you might end up not passing this paper. So we are here today. I'm not here to make you more anxious, but I'm just here to tell you about that how we can manage to pass this paper in the first attempt. See, our intention is to pass it. So to know it, we need to understand what are the features of the paper, first of all. So I'm sure you guys have done your preparation and everything is well, but still we need to understand the scratch basics of the paper. The feature is that it has 80 technical marks. We have 80 technical marks and we have 20 professional marks. That is the feature of the paper, which was not there in a lot of previous attempts. This is what we have. The recent attempt changes that have happened, that we have 20 professional marks. Now, 80 technical marks are related to your subject, are related to how good you write your answers professionally, and how your concepts are. Do you know enough theory or not? The content of your answer, all of that matters to get 80 technical marks. Now, how am I supposed to get the professional marks? Professional marks comes from the outskirts. Outskirts like, what are the outskirts? The outskirts are 20 professional marks for 20 professional marks for logical flow. Okay, it's for the logical flow. Guys, there's some confusion. SBR revision is tomorrow. It's AAA today. Okay, SBR revision same time, it's tomorrow. Okay, so the professional marks, we first have to have a logical flow. We are not supposed to repeat our information. So generally, in SBR, you used to write a background of the case study and then develop points on it, correct? But here you're not supposed to develop a background, because it's just like you're getting into the shoes of an audit manager. And when you get into the shoes of the manager does not repeat what his boss has asked him. So if you see the paper, how it starts, they talk about, what are you taking as a role? What is the role play in AAA? You're acting as audit manager. You are acting on whatever is asked. You have to answer. You have to answer the audit engagement partner. So let's suppose the engagement partner has given me some information. I can't make him understand. I can't make him understand the same thing again, right? I can't make him understand the same thing again. So you have to answer the audit engagement partner, something that he is already told. I will not give him an information on that. So the role play in AAA is that our boss is giving us some information and asking to develop further points. Something that is received as an information already, I can't keep on repeating that information. I have to talk about the implications directly. So you're not supposed to repeat your information, right? You're not supposed to repeat your information. You have to answer the audit engagement partner professionally, just like professionally, just like you would do to your boss. So you have to maintain a briefing note format. You have to have a logical flow in your answer. You have to use professional words. Now, professional words will come from concepts. They'll come from ISAs, right? They will not come from good English, but rather technical terminology from the ISAs. So this is how the things will happen, right? So this is how you get your 80 technical marks and 20 professional marks. Also, to get professional marks, you have to think 360-degree. You have to think 360-degree. You cannot just think from one perspective, because if you're a professional, let's suppose I hire someone to do marketing of TG professionals. Let's suppose, assume a situation. Now if I'm having a consultant, I'm giving my I'm sharing my problem, business problem with them, and let's suppose in return they just think from one perspective and answer. So I will say that the consultant is weak. He just thought from one perspective, he forgot about the rest of the perspective. So I just got limited information. So when you trust someone, right, when you trust someone for consultancy, you want that person to have holistic approach. So similarly, if auditor is doing audit of financial statements, the stakeholders, they want holistic approach, because it's the shareholders who hire the auditor to check the financial statements of the company. So shareholders want the auditor to have a holistic approach, to tell them honestly whether the financial statements are true and fair or not, if there is a control risk in the company or not, if there is a fraud in the company or not. So as an auditor, if you see that there is a control weakness in the exam, you're not just supposed to mention about that control weakness. You have to take a holistic approach, that if one control can be weak, there can be multiple other controls which are also weak. That suggests that this company has a control governance. This company's leadership is weak. That's why they have this internal control problem. And how it can lead to fraud or misappropriation of assets, all of that. So you have to think from a wider, bigger perspective. Okay. So this is what, as in AAA, we are supposed to maintain. We are audit manager. We are a consultant. We have taken money from someone. So automatically it becomes our duty, okay, that we think holistically and we think strategically and answer in a professional way, because we are writing that briefing note to our boss, right? So this is what we actually have to maintain as our uh, feature of AAA. We should know this, not just plainly matching this paper with SBR. SBR was simple paper, no professional marks. AAA, it is complex. It is a little formality based, where we have to do the formality of answering to our boss, and it carries a lot of marks around logical flow, presentation. So you have to write more here. Don't hesitate to write more. Just don't write more in requirements like audit procedures, requirements like audit evidence. Those have to be to the point, because we have a strategy to write these. I'll share that strategy with you. But in rest of the questions, try to write more, give a holistic approach, and use professional words. So today we will learn those professional words from the theory areas of AAA, so that you don't lack professional words in your exam when you're answering the questions. So let us start with the first concept of today, which is the weapon of any auditor. Without this, audit is incomplete. So that is professional skepticism. Let's have a discussion around professional skepticism. Now, this is a term that you must have heard about. So just let me know in the comment section, what do you mean by professional skepticism? Professional skepticism, ma'am, basically is an attitude. Okay, it's not an attitude problem, but in a term, it is an attitude, right? It is a kind of perception that we create. It is a kind of feeling that we have. It's an attitude where we have questioning mind. So we are not taking things just like that. If the client, we are on an audit, and client says something, I will not blindly just accept it. So basically you can say, as auditors, they should not blindly accept what client says, and should always be alert to various contradictions that might exist or suggest a fraud. So basically, we should be very alert, right? And because we are alert, that is the only reason why we are able to find mistakes. So if I send you somewhere to find let's suppose if I send you on a mission, you are the police officer and someone has been murdered and you are there to find who has murdered, right? Who is the suspect. So if you will not be skeptical, if you will not be of an investigative mindset, if you will not be of questioning mind, how will you find the suspect? If you will just be there blindly and whatever someone says, you say yes. If the suspect comes to you and say, I have not murdered someone, and you just rely on them, that wouldn't work. You have to have that attitude of questioning mind. So we are not supposed to blindly accept what client says. And this is a weapon which auditors use, which auditors use to find material misstatements. And not just material misstatements, even more things which are, lying beneath the misstatement. So every misstatement suggests something. Either the accountant was stupid or the company is fraud. There is some kind of, you can say, under the layer aspect that we need to understand, right? So we use this as a weapon against material misstatement, right? So what we do is using professional skepticism. Number one, what do? You analyze contradictory evidences, right? And then second thing that you do is you identify risky areas in the planning stage of audit. Identify risky areas in planning stage of audit, and therefore as well henceforth, not just in planning stage but also after that. And then we also figure out if there was any possible fraud. So by applying this professional skepticism, I can do these many things. That's what we are trying to say, right? So if we keep a questioning mind, all this can be attained. That is professional skepticism. Now, in the questions of AAA, the case studies of AAA, there are so many requirements which are classic. For example, there is a classic requirement of identify and explain the material, or you can say the risk of material misstatement in XYZ client for the year ended XYZ. Right? This is a kind of classic example of requirement that we are supposed to identify and explain or prioritize material misstatement. Now, how do I know that there could be a material misstatement in the financial statements? If I am skeptical, how can I be skeptical? When you do analytical procedures, analytical procedures is an example of being skeptical. I am figuring out how the profit has moved, how the revenue has moved, whether it is aligning with the move of the profit and the cost of sales or not. Maybe there is a situation there revenue has increased, but cost of sales have decreased, but still the profit is decreasing. So I need to figure out the reasons behind it. So when I perform analytical procedures, when I look at trends, when I look at movements, when I look at ratios, right? All of these things, when I look at them and I try to answer my own questions that why this has happened, that is a classic example of application of skepticism, right? Then you have also seen a question where they ask you about, let's suppose they ask you about something related to fraud. So identify, or you can say one requirement exists for fraud as well. List the procedures to be performed to find, to be performed to quantify the loss due to fraud. So maybe the fraud has already happened in the question, but we are supposed to perform procedures to quantify that fraud. So there also you're applying skepticism, because see, it's like you are being that external examiner. I don't know if you guys have given practical exams in your class 11th and 12th or not, but generally when we used to have board exams, there would be someone like an external person who would come who is not from our school. He would come to our school and test the knowledge of that particular school student to see whether the quality of education is correct or not. Now, if that person is coming out from outside and he's checking whether the quality of that school is good or not, of course, he'll be skeptical. He'll be alert. He'll be like, always suspicious. So, another word of skepticism is suspicion. You're always suspicious. You're always doubting. And you are also, talking about you're always under suspicion. You are always negative. Yes, AAA is about being negative. What if? Why this? Why that? How? When? So you are asking all those questions. That's basically skepticism. So, in all the requirements of the paper, you are supposed to apply professional skepticism. And because of this, only you can keep a holistic approach. So, when I say keep a holistic approach, that is not just theory, that is practical. When you are skeptical, when you think about everything, you think about how, when, what, why, that's when you think 360-degree, right? So that's why it's a very important concept in AAA. Then comes another question or another concept that you guys have done related to ethics. So there are ethical questions which are asked in question number, generally not, there's no question number in this. Like in SBR, you used to have question number 2 related to ethics. Here, it could be there in any question, where basically you have to understand the 5 principles of ethics first of all. So what are basically the questions? What are the requirements of ethical area? They ask you discuss the ethical threats, ethical and professional issues, and list any safeguards that could be applied. Right? This is what we have under the ethics. Like this is a kind of requirement that we get. So when we are supposed to discuss ethical and professional issues, guys, how we have to address the question, understand it very carefully. First of all, I will identify, step number 1, I will identify the threat or issue. Sometimes it's not a threat, but an issue. For example, there can be an issue where, let's suppose you are an auditor of a company and that client is asking for non-audit services. So maybe they're asking for financial statement preparation, they're asking for bookkeeping, they're asking for taxation, valuation, they're asking for review, blah, blah. So first is I have to identify that what is the threat and what is the issue. That carries half a mark in itself. Just the identification. That will give you half a mark. Then step number 2, you are supposed to explain that threat or issue. Explain means you have to give its definition. For example, you have identified self-review threat. So what do you mean by that self-review threat? Why is it arising in that situation? You have to give proper line, sentence. It can be same for all the threats, which I'll just give you in a minute. For example, for self-review, it can be, we will be hesitant to find our own mistakes because of the work done by the auditor already. So that's a classic one sentence that we write. Okay, so explain that threat, that issue, that gives you 1 mark. Then step number 3, talk about the significance of the threat. How would you know about the significance of the threat? Maybe that threat is being faced by the auditing engagement partner. So the significance is high. Maybe the threat is there in case of, let's suppose it's there in the listed company. So the threat is high. So we are supposed to talk about the significance of the threat. That is going to give us another 1 mark. Then step number 4. So now I've explained the threat. I've given the significance of the threat. Now I can talk about its safeguard. That how can I reduce this risk or threat to an acceptably lower level so that I can continue with the process of audit. This is how you answer the ethical and professional issues, right? So this is the classic way you answer it. And this is again, as many safeguards you get, you're going to get 1 mark for every safeguard, right? So identify the threat, explain that threat, significance of the threat, and safeguard. So this is going to give you 3.5 mark approx. 3.5 mark approx from that one particular issue, right? So this is how we do it. Any doubts still here before I move on? Okay. What exactly to write in the significance? So in the significance, for example, they say that the threat is faced by audit engagement partner. So you will say that the audit engagement partner is a very high authority, because that person is basically involved in the review and the supervision of the audit. So of course, the threat faced by him is more serious. So you're just talking about the gravity of the situation. You're creating the situation as in a more negative way, because you are always anxious as an auditor. You're always suspicious and negative. So you are supposed to say, oh, this is very absurd, this is like a threat faced by a very high personality, and that person is supposed to do the whole audit. If that person is suffering with a threat, that is very big deal. Then for example, the company is listed, so you will say listed company has more public, you can say, exposure. It has a public interest, and if that company is facing some threat, so that further increases. So you're basically trying to make it look more negative. That's how you actually uh, you know you talk about the significance of the threat. Okay, now let's move on and let's understand the theory of principles of ethics. Pay attention to it. What are the various principles of ethics? Principles of ethics, which every person who has an ACCA qualified is supposed to adhere to. So this is the code of ethics, right? For every different qualification, there are various codes of ethics. But ACCA has its own International Ethical Code of Conduct. There are certain values that we have to preserve as ACCA professionals. Number one, okay, it's professional behavior. Now, what is professional behavior? You understand it and you will be easily able to apply it. For example, let's suppose that you use absurd language in your work area. Now, that means there is a lack of professional behavior. Let's suppose you were given a deadline, and that deadline was basically in public interest, and you did not meet that deadline. Lack of professional behavior. Maybe there was a very important task, but at the end moment, you stop taking calls of your boss. Lack of professional behavior, right? So principle of ethics is that in case of audit, it could be, for example, the auditor is not doing the work properly. He's bringing disrepute to the profession due to his own tasks or due to his own kind of activities. He's bringing disrepute to the profession. For example, false advertising, even that is like you're bringing disrepute to the profession. So if I start saying that, ACCA is chartered accountancy, so that is also false advertising, because in India, chartered accountancy is different, ACCA is different. So just similarly, if you see someone who's doing false advertising, or someone who is demeaning others, bringing others down. So for example, you must have seen certain advertisements, let's suppose of a washing detergent. They make it very visible that which detergent they are talking about. They don't write the name of it, but they actually print the whole packet like that. And everyone knows that, okay, this person is talking about that particular detergent. But they would make the ad that this detergent does not have this, but right? This does not have the ingredients, but we have those ingredients. We are better and they are bad. So you're bringing others down. You can uplift yourself, you can market yourself, but don't bring others down, right? For example, you start calling yourself as the best accounting firm. So that means you're saying the rest of the people are not best. They are below average. So that's bringing others down. These comes under the rules of advertisement. So professional behavior. Then we have integrity. Integrity is basically when you are straightforward and honest. Straightforward and honest, right? Um, so basically, you are saying that straightforward and honest. That basically means that we don't lie, right? We don't lie. That's what integrity is. And in the process of audit, how can you be having integrity if you're not hiding material facts, if you're not obscuring material information? Let's suppose you're not making intentional errors, and let's suppose the accountant is making the intentional errors, then that person is not having integrity. When you hide something, when you obscure something, when you do something in your own interest, and in a way you are lying to the shareholders or the stakeholders, that is lack of integrity. Then we also have confidentiality. Confidentiality is that I am not supposed to leak out the information. So duty of confidentiality is to keep the sensitive information obtained during the business relationship safe. So not leaking out that information. So basically not leaking out information. So if I work with you, if let's suppose you guys start working with TG professionals, and you know that which software for, let's suppose, accounting, which software I use. Now you know that information. Let's suppose tomorrow you go and work with one of the competitors and you leak out this information. So that is lack of confidentiality. So you can give out the information only, you can only give out the information in two cases. Case number one, when it is required by law, okay, or it is in public interest. So you can give out the information without permission in these two situations. But if you have taken the permission, let's suppose you have worked with someone and you have taken the permission that yes, I can let this information out, then it's okay. But otherwise, you cannot leak out the information because it is against the duty of confidentiality. That's what we learn as being professionals. That's how you become a better employee. So unless it is required by law or it is in public interest. When can it be required by law? Let's suppose your employer is facing some case, legal case. So let's suppose the court of law asks you to appear in the court and give some kind of statement in relation to your employer. Now, when the court is asking you something, of course you'll answer. Of course, you'll tell them what has happened and what has not. Public interest, for example, your employer, you see that the person is involved in child trafficking, or the person is involved in money laundering, or there is something harmful substance that they're using in the products that they are making which can harm the public at large. That's when you can leak out the information without their approval. That is the duty of confidentiality. And with regards to duty of confidentiality, you have an issue in ethics which is known as conflict of interest. So let's suppose you're working with someone who you're auditor of company A and company B, and both of them are competitors, right? So you are auditor of company A and company B, and both of them are competitors. So that's where company A and B will be insecure that you will leak out the information, because as auditors you have access to so much information of your client, and there's a huge possibility that you can interlink, leak out intentionally or unintentionally. So that's where this duty of confidentiality becomes very important, because you must have heard about NDAs also, non-disclosure agreements, which you sign with if you're freelancing or if you're an auditor or a consultant. So you sign NDAs, marketing firms especially, because marketing information is so important to every company. So similarly, auditor is also supposed to automatically, even without an NDA, they're supposed to maintain duty of confidentiality, right? So in this conflict of interest, in this situation of conflict of interest, this is what is a problem that we might end up breaching our duty of confidentiality. Then next, fourth element of ethics is objectivity. Objectivity basically means being unbiased. So let's suppose a company is saying, you will see this in many case studies, that they say the error in financial statements was made to overstate the profit so that share price could be maximized. So basically, you're saying we want to maximize the share price. That's why this problem or this statement of overstatement of profit has happened. So you're justifying that we are working in the good of shareholders. So that means you're just thinking about the shareholders only. What about the rest of the stakeholders? So that means you're biased. So every company would do this. They will say, because we want to maximize the profit, we are lying in the financial statements. Let the share price increase. So you are being biased towards one set of financial statements, right? That's what objectivity basically is. Then what you have is professional competence. This is very important. See, as an auditor or as an ACCA qualified, you are supposed to have prerequisite knowledge, training, and experience in the field that you're working in. You will see case studies where, for example, you as an auditor who's working on sustainability assurance, but you don't know about sustainable reporting. You don't have any experience in sustainable reporting, but still you're working in sustainability assurance. So that is lack of professional competence. That's bad. How are you working in an area which you are not aware about, for which you don't have knowledge, training, and experience, right? So for example, in this case, what do we need to do? We need to get a continued professional development. We have to maintain our knowledge as ACCA members. This is what we have as our principle of ethics. Now, these principle of ethics are what we are protecting as auditors, as accountants, as ACCA qualifieds. But what are the threats to these principles? What are the threats? Let us list down the threats, ethical threats. Number one, self-interest. So self-interest basically means due to our own financial interest, you might end up breaching integrity and objectivity. For example, auditor, I'm giving you one example. Auditor has shares in the client. Now, client is your investment. You are not just the auditor, but you're also the shareholder. So basically what you're trying to say is that let me just, increase the profit, because at the end of the day, I am the shareholder. So what matters to me is share price being maximized. I don't care about any other thing, but I want the share price to increase. So you just are acting on your needs, right? So auditor has shares in the client. That is a financial interest which auditor has, due to which he might breach his integrity and objectivity. This is an ethical threat. What are the other examples of self-interest? For example, gifts and hospitality. So what if the client offers you a luxury car, and let's suppose they're gifting you a defender, and you're an auditor, and you're like, okay, if my client is giving me this luxury car, and in return I have to just give an unmodified opinion, so you might settle for it. Maybe that was your dream car and you wanted to buy it, and the client is offering you that, and it's very easy to slip into it. But then the code of ethics tell that even though This is a very lucrative offer, but still you have to act as per auditor, as per code of ethics, and maintain your professionalism, integrity, and objectivity. So that's basically self-interest. So in gifts and hospitality, we check the nature, value, and intent of the gift that is being offered. So let's suppose the client is giving you a free pen, pencil, stationery item. That's okay. We can accept it. There is no favor that we have to return in case of a pen or a pencil that we receive. But if that is a luxury thing, like a luxury watch, a luxury kind of, or a big gift, you know, so we have to see the nature, value, and intent of the gift and then decide if self-interest exists there or not. If the gift is like trivial, if the gift is trivial, then I can accept it. Otherwise, I will have to reject that particular gift because it gives rise to self-interest. Then there are certain other things like bonus-based schemes. So in case studies, you will see that many accountants are having bonus-based scheme. Finance director will get bonus on the basis of profitability. So in that case, finance director is automatically having the self-interest to overstate the profit because then his bonus will increase. So there is an intention and there is a reason why the finance director can manipulate or window dress the financial statements. So it is arising because of self-interest threat. Similarly, you have contingent compensation. What is contingent compensation? That's basically when you will get the, as an auditor, you will get paid on the basis of how many other services you provide to that client. So auditor is paid on the basis of how many services extra they provide to the client, or the client pays the auditor on the basis of profitability of the client. So basically, you are telling the client that if we will be profitable, you're telling the auditor that we will be profitable, then we will pay you, auditor. So you must have seen a lot of, like, for example, when you go to any clothing shop nearby, let's suppose you go to buy some good ethnic wear for yourself. So that particular shop will have salesmen, right? And each salesman will try to pitch you a particular dress because, of course, they want they want that you buy from them, because at the end their commissions are based on that. So the salesman will try to pick you as your client, as their client, and they will make money out of whatever you buy. So that is like a contingent compensation. They're getting some kind of fees on the basis of how many sales they make. They're getting some bonus. So similarly, if you treat an auditor, you tell the auditor that if we will make profit, you will also get a share in it. That's basically, you're trying to keep the auditor as your side chick, and you're saying, okay, auditor, you will make money if we make money. So auditor will always be aligned with your interest, and he can easily, manipulate or let you manipulate the accounts. So that's where self-interest arises. Then there can be fee dependence. So fee dependence is basically if a client is very big client. Let's suppose for two consecutive quarters, the fee from one client is 15% or more of total revenue of the audit firm. So this gives rise to self-interest. So basically, if from one client for 2 years consecutively, I've received more than 50% of my total revenue. So why this is a self-interest? Because basically, I will be too dependent on the client and bend to their needs and requests. So if client requests me ignore a material misstatement, I would do that because I want to retain that client. So it is also kind of an intimidation threat, right? So if such thing happens, you have to, as a safeguard, if such thing happens, you have to reduce the dependence on the client. So maybe you will stop providing certain services to them. So you'll reduce the dependence on client, or you will reduce their fee. You'll have to do something, right? So this creates self-interest threat. Various such examples exist. I've given you a few. Then there is also another threat which is there, that is self-review. The second threat that we are going to talk about is self-review. So it specially arises when you give non-audit services. So you are an auditor, you are supposed to check all the financial statements of the client. But let's suppose you have prepared a part of the financial statement. Will you check your own work properly? If I today tell you, you give an assignment and self-check yourself, you'll always say, I've done good. If you have to check your own mocks, you'll always feel you have done better. So basically, you will not find your own mistakes because you have done something thinking that was right only. So you will not find your own mistakes, right? So that is basically self-review threat where you are reluctant to find. Auditor is reluctant to find his own mistakes. So he might not end up finding his own mistakes. For the non-audit services, as an auditor, you can provide services like review to your client. You can provide services of valuation. You can provide services of tax computation. You can provide services of financial statement preparation. You can provide the services of bookkeeping and so on. But what is the rule, guys? What is the rule? As auditors, you have to see whether our client is listed or not. For listed companies, any non-audit service related to financial statements, whether it's related to financial statements, internal control, let's suppose let's suppose that company is using QuickBooks. So I can't create controls around QuickBooks, right? So any non-assurance services that is related to financial statement, it can be related to internal controls with regards to financial reporting. It can be related to tax calculation. It can be related to your valuation of something, an asset or something. It can be related to bookkeeping. All these services are strictly prohibited under the Code of Ethics. So as an auditor of a listed client, you cannot provide these services. But to unlisted client, you can provide. It is allowed, but with safeguards. What are the safeguards? That you use separate teams. Okay, you use separate team and you do a quality control review of that particular client. Whatever work you've done, you get a quality control review done of it. That's how you can avoid self-review threat which arises due to the provision of non-audit services, right? Then you have another threat, that is intimidation threat. So intimidation threat is actual or perceived pressure. It's an actual or perceived pressure. So let's suppose you're working with your boss today, right? So you are naturally intimidated by the boss. So you naturally feel afraid from your senior, not just boss, but you naturally feel like intimidated by a person who is senior to you, correct? So now if in future that person becomes your client, just imagine your boss becomes your client, you're an auditor, the boss started a startup and now you're the auditor of that startup. So automatically you might feel right now that my boss really troubles me a lot, so I will take all the revenge. But still, even after that, if you naturally think, you will be intimidated by that person even years later, because you will have that feeling of perceived pressure. He is not actually doing something to pressurize you, he's not threatening you for anything, but you will have that perceived pressure, right? So this is intimidation threat. For example, someone says complete audit. If someone says complete audit in this timeline, This is also a pressure. This is also intimidation that, okay, why are you pressurizing me as an auditor? Let me do the work as per my, time and efforts. Let me do it as per my planning. I don't want any pressures, right? Similarly, if someone says, reduce the fee of audit, or else we'll replace you, or else client will replace you. That is also an intimidation threat. So you are just kind of threatening me that if I don't reduce my fee, you will kick me out. So that's basically you are threatening someone who is supposed to check the truthness and the fairness of the financial statements. So this is intimidation threat. And how can it be reduced? When you can discuss this thing from, you can discuss this with TCWG, and you can reduce this threat. And if it does not reduce, you can decline that engagement, or you can resign from that engagement. But don't work under pressure, because audit is not something that you can just do like that. So many people are looking up to you. So many people are waiting for your audit report. So you can't sign an audit report which you have done under pressure, whether it is an actual or a perceived pressure, right? That is intimidation threat. Then what we have is advocacy threat. So a lot of times in your AAA case studies, you will see that the client is saying, accompany me to the meeting with the bank. Accompany the client in a meeting with bank to get loan. So you're basically wanting to get loan for your client. So you are trying to promote the interest. What is advocacy threat? When you promote the interest of your client. So you basically are not acting as an examiner, as a auditor. Rather, you are promoting the interest of your client. You are letting them do business. You're teaching them how to do business. You're helping them to get a loan. So the bank, bank might confuse the auditor as guarantor of solvency, and even the bank can sue you if the client actually ends up not uh, paying the loan amount on time. The bank can approach you to repay on behalf of your client. So this is also a legal obligation. So not just it is an ethical issue, but it will also cause you some legal obligation. So there are so many such examples where there can be an advocacy threat, where you are trying to act in the, you're trying to work in your client's favor. Then there is familiarity threat. See, familiarity threat is when you have long personal or such associations with your client. So long or close association with client. What happens due to familiarity threat? See, if I would know my client already, if I will be friends with my client, what will happen? I will end up favoring them. So there is a risk of favor. What you are breaching here, you are breaching objectivity. You're compromising your objectivity. You are becoming biased towards someone that you know from long, who is a friend of yours. So you're trying to make their, life better because you know them. So that is a familiarity threat. Then lastly, you also have a threat of management threat. Management threat is, let's suppose you assume the responsibilities of the management as an auditor. So what will happen here? You are getting into the shoes of the management. The work that was management's responsibility, something which management was supposed to do, you end up taking that responsibility on yourself. So that is something very bad, right? So you're assuming the responsibilities of the management. So this threat can't be reduced to any level. Whenever this threat arises, you have to run from there. Okay. Management threat means resign from that particular job or task, because you're basically, let's suppose there's a small company and this is a small startup, and that takes advice, business advice from the auditor. It asks for business advice from the auditor. So at the end of the day, if I give them the strategic advice, they might depend on me too much, way too much. And they might start looking up to me for any decisions that they are supposed to make. I am the auditor. I'm not the CEO, right? But if a small company is there and they take advice from me, I might end up becoming a CEO, that too an unpaid CEO. So we need to avoid that situation. And as auditors, we have to make it very clear that auditors are supposed to check your financial statements and not run the business from scratch. So that's management threat. So these threat and important situations exist, and how we are supposed to answer ethical questions. I've given you all the steps. So basically, this question can be asked from you for like about 8 to 9 marks or even more than that. That's why I've spent a lot of time on this topic. Are we guys clear on this? Are we all sorted? May I move on to money laundering now? Okay. I want all of you to keep high energy. So let me know, are we all clear, and be participating in the chat box? Have a glass of water or something. Okay, that's great. Let's continue with money laundering. Now, this is a direct theory question which can be asked for like 6 to 7 marks. Like, what is money laundering and what steps ACCA has taken against money laundering? So, money laundering is a process where you conceal the, what is the definition? You need to know the exact definition, the keywords of money laundering. So, it is a process of true origin, concealing the true origin of illegal money or illegal funds by placing it into the legal environment, and layering it with a lot of transfers, so that finally its true origin becomes untraceable. So you're moving that money so much, something that you earned from illegal means. Maybe you have actually done human trafficking or something like, which is illegal, maybe tax evasion. So the money that you have from that, and how you're moving that money to save it, to, move it from here and there by following 3 processes that I'll talk about. That's basically money laundering. So you are basically converting dirty money into clean money. That's what money laundering is. What are the steps involved in it? First is placement. For example, you are a cash intensive business. So you have a lot of cash receipts. So let's suppose you mix dirty cash with till receipts. So till receipts are there in your, like for that particular, let's suppose you are having a shop, right? So you have some till receipts in your cabinet, in your, that particular thing or that box which is kept on the counter. So you have that money there. So let's suppose you mix illegal cash with legal cash, right? So that is the process of placement. Second is layering. Layering is when you move the money. When you move the money, okay? So let's suppose from that counter, you took the money to buy a property. You took the money to send abroad. So that's basically you are doing some kind of layering. So international bank transfers into small bank accounts, or buying a property abroad, or buying a property using cash. All of that is layering. Then integration. Integration is when you finally, invest that money into something legal. For example, luxury shopping. So let's suppose you bought a property from cash. Now, somebody can catch you that what is the property value versus what you paid in white, right? So somebody can catch you that this is the transfer that you've made from the bank and this is the price of the property. So that means the rest of the money you've paid in cash. So you are hiding something, right? That is catchable. But let's suppose you sell that particular property, and after selling that property, whatever amount you get, you buy something luxury, like a luxury car from it, luxury watch from it. So you make it legal. You're like, okay, I bought a property, then I sold it. This is the money that I've made from the sale, and that's how I've invested it. So nobody's questioning now that from what money have you purchased that property at the first place. So you layered, you did a lot of transactions, and then you're finally integrating it into the legal system. That is the three-step approach of money laundering, which is an illegal activity. How do you know that someone can be involved in money laundering? What are the indicators of money laundering? For example, a business is cash intensive. For example, in today's era, most of the businesses, they're online. So they're less cash intensive. They collect the money online. It is all bank transfers or credit cards. So it always happens in the bank, right? So it's very traceable amount. How much money that company has made, it is very traceable. But let's suppose a company is making money in cash. How would you know how much sales have they made? Maybe they are not recording the exact amount of sales. So cash intensive businesses, they have more, you can say, exposure or opportunities of money laundering. Then let's suppose that company is having unusual high transactions. So unusual high transactions, like suddenly a huge amount of money was transferred from the director to someone else in abroad, right? Uh, Unusual high amount was received from somewhere. Then if there are small transfers to various accounts, so you are sending small money here and there. So that is also an indicator of money laundering. You have an overseas bank account for no reason. If you have a company there, then it makes sense that you have a bank account there also if you have work there. But let's suppose without any reason, you have an overseas bank account. So that doesn't make sense, especially in countries which are tax heaven, right? For example, you have Singapore, right? You have uh, the Caribbean islands. So all these areas which are tax havens, if you are having some kind of relation with such countries without any reason, then that is an indicator of money laundering. Now, this is what the concept of money laundering is. Anyone who is directly or indirectly involved in money laundering is basically a criminal because it's an illegal activity. So, for example, if you take money from someone without any reason, you didn't know that what the person is doing, right? You just innocently took the money. Let's suppose you were traveling somewhere and someone just came to you and said, "Oh, my card is not working. So can you take the money from me?" So in that case, if that person has earned that money from an illegal activity, but you also ended up taking that money, you also become or come under the radar, right? So you'll see a lot of countries which have strict laws that from unknown people you can't accept or you can't pay money because you then directly or indirectly get involved in money laundering. You become part of the system. You become one of the receivers or the pairs where you have layering going on, right? So that's also illegal activity. Then tipping off. If you suspect someone that they are involved in money laundering and then you end up telling them that we suspect you, you end up telling them that we suspect you, so you are making them alert. Now they will try to conceal the evidence as much as they can. So you are tipping off, right? You are letting the suspect know that I doubt you, dear suspect. So you are basically tipping off, right? So that in itself is an illegal activity. Now, what does ACCA say that how can you take measures against money laundering? So ACCA guidance anti-money laundering, which is anti-money laundering. How can I avoid money laundering? What does ACCA say? ACCA's guidance is that every company, not just audit firms, every company should have an MLRO. MLRO is a senior nominated person. Why he is a senior person? Because people are going to reach out to him. Nominated because he can't be someone's friend, right? He has to be like a independent person. So senior independent person to whom we are going to report as a firm, whenever, let's suppose I'm working in certain XYZ company and I have a doubt on my finance director who's senior to me that he's doing some money laundering. He's making suspicious transactions out of the company's bank account. So I will report the suspicions to this person. I will go to my MLRO in that particular company and I will report my suspicion. So that MLRO has to be objective, unbiased, and he has to be a senior person, right? If he'll be a friend of the finance director, then how will the things happen? He will always favor the finance director. He will not even write my report. So I have to appoint an MLRO who's a senior nominated person to whom the suspicions are reported. And then that MLRO actually makes a report on that suspicion. Maybe he will look at the transaction, he will look at the balance, he will look at the what happened, and he will make a report that who is the suspect, what is the value, what was the transaction, and he will report it to competent authority. So you must have heard about ED, enforcement director. So there are lots of enforcement agencies, right? So in every country it is different. So this particular MLRO will report it to the particular enforcement agency and he will report it to the respective person. That's the first step which ACCA suggests you should take against money laundering, that every company should have an MLRO. Then KYC. So every company, before you start working with any client, employee, person, director, non-executive director, do their KYC. Understand that who is that person, from where do they earn, what are the source of funds, who are the investors, who are the owners, whether the company has a registration or not, whether the person is Indian, whether the person is Pakistani, whether the person is from other American or European country. You need to understand from where are they coming, and with whom are you associating yourself to. So you have to do that KYC, you have to be that mindful. Then know your client procedures. Third, enhanced record keeping. See, if you're working with any client, especially as auditors, if you will be sued in future that you worked for someone who was involved in money laundering and you did not report it to us, so you should keep the record for more than 5 years. So in case such thing happens, you can have the record. Okay, this was the case. 5 years have gone by, and I still have the documents to prove my side. So enhanced record keeping. Communication and training. So from the lower level of staff to upper level of staff, you should train every person that tipping off is an offense. You should tell them that what is money laundering and how, if they have a suspicion of money laundering, whom they're supposed to report and how they're supposed to avoid tipping off. That is communication and training. Then policies and procedures. So policies and procedures. Basically, I should have such policies in place where I do the risk assessment again and again, that which company can be involved in money laundering. I should keep an ongoing check on them. So there should be such policies, like before onboarding a client, before onboarding an employee, before making any business partnership, that we have policies to check their background. We have policies to keep an ongoing check on their background. So such policies and procedures should be in place. And this should be monitored also, that whatever policies and procedures you have made against money laundering, whether they are working correctly or not, you should monitor that throughout. So this is the ACCA's guideline against money laundering. And this can be asked as a direct question for 7 to 8 marks, where what is money laundering, what is the process of money laundering, and what is the ACCA's guidance against money laundering. Specifically in question number 1. You must have seen questions related to this in the exam kit. If any particular company is seeing these indicators, you are supposed to talk about money laundering. Money laundering also falls under the scope of professional issues. So if a company or if a requirement says list the ethical and professional issues and you identify money laundering there, you can talk about money laundering in the section of professional issues as well. That's it. So this is what we have from the topic of money laundering, ethics, professional skepticism. Right? Are we guys clear on all of this? Okay. So now we'll take a break of 5 minutes and then we are going to continue with the topic of ISQM1. Very important topic. So we'll take a break of 5 minutes and then the next topic is ISQM1. And until then, you can have a cup of coffee or a glass of water. And then we are going to get back with a very important topic, ISQM1. Yes, guys, let us continue. Please confirm to me if I'm audible to you or not in the chat box. ISQM1. Let's talk about ISQM1. That is International Standard on Quality Management. Okay. So, what does the standard stand for? See, as an auditor, I'm supposed to maintain the quality of audit that I do. And for that, I should have some standard set of policies and procedures so as to maintain the quality of audit. To maintain the quality of audit. That is what I basically mean by standards on quality management, right? So ISQM1 says that we should have some standard on quality management. That's why ISQM1 came into place. What are these standard set of policies? Number one, you have to learn them, okay? Like mug them up, theory. Can be asked as a direct question because application based of quality management is very easy, where you just look at something in the case study and you comment whether this is of apt quality or not. But for the theory of it, what are the elements of ISQM1? First of all, firms risk assessment, firms risk assessment process. So as a company, you should keep a risk assessment process that, for example, you're accepting a client. For acceptance of client, there should be procedures that are you of apt size? Is your environment such that you will be able to cater to that client? Do you have enough knowledge, training, and experience or not? So it should not be one time process. It should be like an ongoing process where you have to keep checking the risk of that firm. Okay. And you have to have this process in your company before you accept a client or you on go with the client. So such a process should be in place to make sure that you are not accepting a client whose work you can't do or for whom you don't have enough knowledge, training, and experience. Right. Then the second thing is governance and leadership. This is also very important to maintain the quality of audit. See, the audit firm's governance and leadership, the CEO of that audit firm, the chairman of that audit firm. You must have heard that the leadership sets the tone of the organization. So culture of the organization is set up by the leaders of that particular organization, the top management, basically. Now, if the top management is focused on, let's suppose, profits, so then the whole team will be focused on profits only. So as a top management, you should not, do not focus on profits and client pleasing slash retention. Rather, focus on quality and ethics. So if I know that my boss, he just or she just wants to pay attention to the fact whether the audit client is pleased or not, because we don't want to lose a client. We don't want to offend them that they leave us and our fee will be dumped. We don't want that. If our whole culture is like that, then I will bend to any needs of the client. If the client says I'm manipulating this, just put an ignoring eye on it, I will ignore it because I want to retain the employee, right? I need to retain the client. So that is a culture that I'm getting from my bosses. But if I know that my boss is very particular about ethics, he always or she always talks about ethics. And I know this is what, when we meet for a team meeting, that's what we prioritize. In a situation, we don't care if we are offending someone, but if we are ethical, we go for it. If that is a kind of culture that we have in an audit firm, then definitely the auditors will be having that motivation to abide by the ethics, right? And then only the audit team can confidently challenge the client's judgment. So if you know that client is doing something wrong, then only you can challenge that judgment of the client. Otherwise, you'll bend to the needs of the client only. Then relevant ethical requirement. So basically, every audit company, every audit firm should have that kind of mindset that they're following basic ethics, which are related to their qualification. For example, in ACCA, we have IESBA. Then acceptance and continuance of client relationships. So basically, when you are accepting someone and you're continuing the relation, you have to check for their ethics also. For example, if they're involved in money laundering or not. That also makes sure that you have quality client and therefore you can do quality work and you're not involved directly or indirectly in crimes like money laundering. Then engagement performance. Now, this is very important. Engagement performance. Now, as an auditor, you have to make sure that you are performing really well at each step of the audit. What are the steps in audit? See, first comes the direction. When you plan the audit, that is the direction of the audit. So if, for example, a case study says that there was no planning meeting in the audit of XYZ client, so we will say this is lack of direction. This is lack of engagement performance, which is why the quality of this audit is depleted. So direction comes with planning, risk assessment, team meeting, right? All of that. Then engagement performance is also about supervision. Now, supervision, for example, a junior audit team member has done something. Senior should supervise that, should review that work, right? And at each stage of audit, the work of the audit team members must be supervised. Then consultation. Wherever necessary, I should take consultation from a expert. Okay. For example, let's suppose we are talking about value of an SAR. Now that comes from a valuer, that comes from a experienced person. So I, if needed, definitely I should reach out to some person and seek consultation or a valuer's report, right? So consultation is very important. Then resolution of disputes. As auditors, if any dispute arises, any conflict arises, I should work on it and I should resolve it. So this is the engagement performance steps. Like, you should have good direction in the audit. There should be supervision whenever necessary, take consultation and resolve disputes if any arise during the process of audit. And then you also have human resources. If you want to maintain the quality of audit, you have to make sure that you have enough resources in your audit team. So human resources, apt quantity of app quantity of audit team members, and apt seniority also. So you cannot basically say that, okay, I am making an intern work on financial instruments. That will be so stupid, because intern is, you all know that financial instruments is a risky area and it is a complex area, right? And if I make an intern work on it, that will make it very terrible, because the intern might mess up the numbers. The intern might not know the technicalities of financial instruments. So that is basically human resource, how you manage your human resource, whether you are making competent staff, level of staff and quantity of staff on a particular assigned task or not, right? That's human resource. Then seventh is communication. How you communicate, amongst your team. There should be proper channels of communication. When the engagement partner wants to talk to the manager, or when he wants to talk to the rest of the audit team, and how people can, communicate with their seniors, how the policy works, how the hierarchy works, all of that should be properly set up, and there should be clear communication between all the team members. Then monitoring. Whatever policies you have in place, you have to keep monitoring that. That's how you can maintain the quality of those policies, right? So these are the elements of ISQM 1, which you might have to answer directly in a question, where first is firm's risk assessment process, governance and leadership, relevant ethical requirement, acceptance and continuance, engagement performance, human resources, communication, and monitoring. Now, when a question comes on its application, what we will see in the case study, general scenarios. The application is very easy. Application is basically, for example, in a requirement or in a case study, they've said no planning meeting was held. Or in the case study, they have said that, no review took place. No review took place. Audit senior is on leave since beginning of audit. Or let's suppose, what else we can say as an example for quality management? The intern was assigned the audit of deferred tax. Or you can say that, let's suppose the audit engagement partner did not review, partner did not review the working files and just signed the audit report. Now, these are certain examples where the quality of audit is hampered. You can see these in the case studies as a sentence. But how will you answer it? That's the question. So many of you might think that, ma'am, if no planning meeting was held, how will you answer it? Come on. You will just simply write, because there was no planning meeting held, that's why the quality of audit is not apt. But that is very narrow way of writing an answer where you're not expressing, you're not showing your professional skills, and you are just giving a weak or a poor answer. A good answer will talk about how it hampers the quality. We know that without planning meeting, the audit is directionless, the audit is bad, you are not finding the risky areas, but how we articulate it, how we make an answer out of it. See, when we have to tell someone, when you communicate, let's suppose you are telling your friend, just think like that, you're telling your friend that that person in your life, maybe your friend's particular interest, okay, so you're saying, okay, that person in your life is not good for you. When you tell this line to your best friend, he or she might get offended because maybe they are in love, but you're saying that person is not good for you. So you have to give a logic to it, you have to give some kind of uh, argument to it, right? So how will you go about it? You can't just plainly state the fact and say, no, this is not good. Similarly, in audit, you have to give a logic. So when I say no planning meeting was held, I will first tell them what is the significance of planning meeting. Planning meeting's significance is what I will first state. Planning meeting sets the, I will say it sets the scope, timing, and direction of audit. It helps to identify risk of material misstatement and devise auditor's response to it, and also leads to proper segregation of duties amongst the audit team. This is what, basically the planning meeting helps in. So this is what I've stated as the significance of planning meeting. Now, when the planning meeting has not happened, what is the implication of it? So since in this case, the planning meeting hasn't happened, it might suggest a directionless audit where the team members are unsure about the work they have to perform, which can lead to poor procedures, poor substantive procedures, uh, non-identification of risk of material misstatement, duplication of work, because if you have not dedicated the duties, two people might end up doing the same task, so duplication of work, and overall, a risk of giving an incorrect audit opinion, thereby leading to a poor quality of audit. Now see, what is the difference between what you were thinking to write versus this answer? You were just saying no planning meeting was held. This suggests directionless audit and therefore poor quality of audit. But the way I have answered, I've added length to the answer. I've added value to the answer. It's just the way you think and how you write or articulate an answer. That's why AAA is difficult to pass. Many people, what you are saying versus what I have written is same in the sense. You are also saying it is having poor quality of audit. I'm also saying it's poor quality of audit. But the way you write the answer makes the whole difference. Right? So that's what you have to learn. Similarly, the audit senior is on leave since beginning of audit. First, you'll talk about that audit senior, what is his role? You'll talk about his role, that he's doing the supervision, right? He's checking the work assigned is being done on time or not. If there's any contradictory evidence, he acts on it. He reviews the work of the rest of the team. So basically supervision. Now, because supervision is not there, so there is a risk that the audit team might have done a mistake which will not come to the limelight. And this will again lead to detection risk and therefore poor quality of audit, right? So these are the things you have to keep in your mind before devising your answers for quality management. So even though the quality management theory is like large, but at the end of the day, its application is basic, which requires skill and technique more than theory knowledge, right? Now let's move on to another concept, another theory topic, that what are the auditor's responsibilities for non-compliance with laws and regulation, and then fraud. So auditors responsibility regarding non-compliance with laws and regulations. Non-compliance with laws and regulations. So if any company, any client of an auditor is not complying with laws and regulations, let's suppose there's a law related to tax. There is a law related to hiring people, that you have to deduct this much TDS before you pay salary to them. Or there is a law related to safety. Let's suppose you are a construction company. So certain quality of materials that you have to use, certain level of pollution that you can create, which you can't exceed. So there are certain laws and regulation every company has to comply with. So when we understand our client, when I talk about pestle, we are understanding their legal environment. So that legal environment is basically what I'm talking about is as law, right? So every company has certain laws and regulations. But the primary responsibility, whether that company is complying with laws and regulations or not, that lies on the management. That lies on the owners of the company, not the auditor. Auditor is there to check whether they're complying or not. Auditor is not responsible for their compliance. Auditor is not the parent. It's not like a company is a kid and auditor is the parent and they have to make sure that kid is right at all times. The auditor is there to check if they're complying or not. So, what is the auditor's responsibility? Number one, management has the primary responsibility. Management has the primary responsibility for compliance with laws and regulation. Okay, so management has the primary responsibility. However, auditor, uh, you know, has a responsibility for laws which directly impact the financial statements. So auditor has a secondary responsibility. So what is the responsibility of the auditor? He needs to see under ISA 315, he's supposed to first of all understand the legal environment of the client, that what all laws and regulation applies to that particular client. That's what we have to understand. Then, uh, if the NOCLAR is identified or suspected, if a non-compliance, so if a NOCLAR is identified or suspected, okay, then the auditor has the duty, then the auditor has the duty to gather further evidence. Only if it is identified or suspected, you are supposed to get further evidence that what is the nature and circumstance under which the NOCLAR has happened. And how does it impact? What is its impact on financial statements? That's what you are supposed to do as an auditor. First, you're supposed to understand the legal environment. That's your duty. Second duty is if you suspect or you identify a NOCLAR, then you're supposed to see under which nature it has happened. What was the circumstance under which it has happened? Was it on purpose, intentional, unintentional? And then you have to see what is its impact on the financial statements, right? And then if that NOCLAR exists, you have to report it to TCWG. First, tell TCWG that you have this non-compliance. They will amend it, now comply with it. But if they don't, if they're doing it on purpose, then I might have to breach the duty of confidentiality, and I might have to let other people know that this company is breaching law and regulation. I might have to tell it to appropriate authorities. For that, I might seek legal advice, right? So that's what I have to do as an auditor. And all the laws and regulations which directly impact the financial statements, on them I'm supposed to perform procedures and get sufficient and appropriate audit evidence whether they are complied with or not. But the laws which indirectly impact the financial statements, for them I have to just maintain professional skepticism. Okay, so I have to just maintain professional skepticism that they are complied with or not. For example, your tax laws, they are directly impacting your financial statements because you have tax charge in the financial statements. So for that, you have to gather sufficient and appropriate audit evidence that the tax charge has been correctly calculated. But for example, safety regulation. Now, safety regulation indirectly impacts you because if there will be a fee or a penalty or the license will be, cancelled, then all of that indirectly impacts the financial statements. So for that, I have to just maintain professional skepticism. That's it. So these are the auditor's responsibilities regarding non-compliance with laws and regulation. Then you also have a situation of fraud. If the client, there is a fraud happening, fraud can be of two types. Number one, window dressing. Window dressing is basically where you are trying to manipulate the results. You are manipulating the financial statements in some way, overstating the profit, assets, understating the liabilities. right? Second is misappropriation of assets. Let's suppose the assets are stolen. That is also a fraud. So a client can be having a fraudulent situation in their company. So as an auditor, what is your responsibility? That's the question. What is your responsibility as an auditor? Yes. So what is our responsibility as an auditor? Number one, first of all, management is the one primarily responsible for prevention and detection of fraud, right? Then auditor, in all good circumstances. See, as an auditor, you might even be going for the audit, and it might be expected from you that if you have done work on this client, you should have known about this fraud happening. But fraud's nature is such that we do it with the intention to conceal it. So it's very difficult for the auditor to identify fraud. So auditor in all good circumstances might not be able to detect the fraud even if the audit the audit works in the most perfect way, because nature of fraud is such that the preparator of fraud wants to conceal it, wants to conceal it. So auditor might collect evidence. Auditor might collect evidence regarding any suspected fraud, but that would just be persuasive and not conclusive. So even if you collect some evidence, if a fraud has happened, if you have collected an evidence, that will just think that will not give you a conclusion that who has conducted the fraud, why were you able to conduct the fraud. So that will not give you any kind of a conclusion, but just a persuasion that yes, persuasion that this might have happened. So also the fact that auditor uses various techniques like sampling, which might lead to neglection of fraud. So if you use techniques like sampling, that also might lead to neglection of fraud. Then you have to maintain, as an auditor, auditor's duty is to maintain professional skepticism under any suspicions of fraud. So if you think that fraud might be there, even 0.1%, make sure you are skeptical about it. Then auditor is not responsible, however, auditor is not responsible, however, to identify risk of material misstatement due to, so auditor is not responsible for fraud, but auditor is responsible, however, to identify risk of material misstatement due to fraud. So if auditor has lacked his duty of care to perform substantive procedures on a risky area, then yes, up to some extent, the auditor can be held responsible. The auditor can be held responsible for that fraud. So guys, basically what we are trying to say here is that, you must have heard that auditors are always afraid that they will have some duty, legal duty. Because when you sign an audit report, people expect that you would have done all the work and then signed the report. But there is always a risk that what if I'm unable to find the fraud in that particular company? Then the public will charge on me, or I will be sued in the court of law as an auditor. So basically, what we're trying to say here is that yes, auditor has a responsibility to find risk of material misstatement, but I can only be sued as an auditor if someone proves that I did not do my work properly. Even after my work being done properly, still I was not able to identify fraud. That's a different thing, because fraud's nature is such that we conceal fraud. It's very difficult for anyone to identify a situation of fraud. Same for the auditor. But if someone proves that my work was not proper, I did not do enough procedures, then yes, I can be sued as an auditor. That is known as professional liability. So these are the 6 points that you have to memorize for fraud. So I've given you direct, you can, write it in a better way. I've just given you the keywords. So for non-compliance and for fraud, you should remember these wordings. Direct theory question. So when I complete fraud, then comes the point of professional liability. So when can you have a liability? When can you be sued for any work as an auditor? See, first of all, in that situation, there should be a duty of care that exists. So duty of care exists. So basically, there should be a implicit or a natural duty which auditor should have been doing in that situation. Then only I can say that he did not do a duty. If you say someone, let's suppose I am auditing XYZ company and XYZ company has loss. So auditor has nothing to do with loss. Auditor is not CEO of XYZ company. Auditor is not responsible for their losses. Auditor is responsible for risk of material misstatements and misstatements in a financial statement. So he should have a duty of care in a particular situation. Then only I can sue him. Then there must be a breach of duty of care. So maybe he have not done enough work. Maybe he has not understood the client in the planning meeting, or maybe he has not done proper substantive procedures on a certain area of work, like financial instruments and so on. So there must be a breach of duty of care. Then there should be a financial loss, not just breach, but there should be a financial loss because of that breach, which can be quantified. Then only I can say that yes, there was an auditor's liability here due to which he's being sued. And how can the auditor limit his liability? How can auditor limit the professional liability? Because then everyone will charge up on you. If a client does anything, the shareholder will first pick up the auditor and blame them. So auditor needs to, limit their liability. You can limit it with acceptance procedures. Don't accept the clients which you think will do such fishy things. So acceptance of client. Don't accept such stupid clients which would do stupid things. Then do documentation. Whatever work you have done, the working papers, make sure you document them properly, so that in future nobody comes up and say you have not done the work. Whatever work you've done, document it properly. Then in the auditor's report, give a disclaimer of liability. Basically telling them to whom are you reporting this report to. So let's suppose I've only made the report for shareholders as an auditor. So I now don't want any particular random bank person to come up and say that, because of you, we got frauded. Because of you, we have trusted this particular company because you signed their audit report. So you are giving a disclaimer of liability that this report is only for shareholders. Then cap the financial loss. That even if my mistake is proven, I will only bear a multiple of my audit fee. So you're capping the financial loss. You put it in the engagement letter basically. Or you make a limited liability partnership. So your audit firm is not a sole proprietorship where you and your firm are same. If someone sues your firm, basically means they're suing you. That should not be the case. You should be a different person. Your company should be a different person. Then engagement letter, properly lay down your responsibilities in the engagement letter so that nobody can, cause you trouble. Your contract should be proper so that nobody can unnecessarily trouble you or say, no, this was your duty. Okay, so lay down your duties properly in the engagement letter. That's how you can limit your liability. That's it. So this is what we basically have from the perspective of uh, the direct theory question of non-compliance with laws and regulation and fraud, and then lastly the professional liability. Are we guys clear on this? Okay. Only 3 yeses. What about the rest? We have 80 people in the class. I want a confirmation from all. I want your energy to be high, okay? I know it's a theory subject. Come on. Are we clear on this? Okay, that's great. Now let's move on to business risk, audit risk, ROMM. See, let's talk about question number 1. How to write good business risk answers. Now, there is no theory to business risk as such, right? But the question is how to write or how to deal with business risk questions. Because in question number 1, that's what you generally are asked about, that evaluate the business risk in that particular case study. So let's suppose the question is evaluate the business risk faced by the company. And the question is for 8 marks. Let's imagine this situation. So this means for every 2 marks, I will give 1 risk, okay? And 1 will be for its identification and 1 mark will be for its explanation. So that's how I'll get 8 marks if I give 4 risks. Now in these 4 risks that I'm giving, okay, the 4 risks that I'm giving, what I'm supposed to explain, how I'm supposed to explain. You have to keep a CEO perspective. You are supposed to step out of from the audit manager role play to a CEO role play. You have to think from CEO perspective. How my company will survive? What risks my company is having? For example, in the case study, they have given that you work in a competitive industry. So you will give a risk point here, high competition. In its explanation, you'll explain that how this competition affects you. What will be its impact? So if there is a high competition in the industry that I work, that would mean that if my quality deteriorates, okay, if my quality declines, or if someone comes up with prices lower than my products, so I will lose the market share and the customers will choose the alternate, will choose the alternate. This is what your risk is. You're letting out your insecurity here in the point of high competition. And this would lead to possible decrease in revenue and customer demand, right? This is what our business risk looks like. And this is what I think from the CEO perspective, correct? If there's a high competition. Similarly, if in the question it's written that, let's suppose uh, the company is supposed to maintain certain gearing ratio. Otherwise, they will be, otherwise they will be um, breaching the debt covenant. So now you're risking breach of debt covenant. So if there is a risk that you might breach the debt covenant, what will happen is you might have to repay the loan immediately. If that happens, you need emergency fund, you need money, right? And the possibility is that you don't have money, so you might have liquidity problem. You might get some financial risk, get into a financial risk where you might not have enough money. So you might have to sell the company. So that will create a going concern problem for you. Because if you don't repay on time, the bank will, sell your company to get its money back. So that is a going concern problem. So I am starting with the point that is identified and I'm talking about its implication, that how it is bad for my company, what all possible impacts it will have. So you are having a CEO perspective, but a pessimist perspective. Okay, you are not having an optimist perspective here, but a pessimist perspective, negative perspective. That's how you answer business risk. Similarly, what about ROMM and audit risk questions? How to answer ROMM and audit risk? Risk of material misstatement and audit risk question. See, first of all, you should know the difference between the two. The risk of material misstatement includes inherent risk plus control risk, whereas audit risk includes inherent risk, control risk plus detection risk. So inherent risk plus controlled risk is basically, inherent risk is natural risk. For example, financial instruments are naturally difficult to account for, right? Inherent risk. Controlled risk is that maybe the controls in that area will be weak, due to which there might be a misstatement in the financial statements. Audit risk is including detection risk. Detection risk is that the auditor might not be able, to find its, mistakes. So auditor might not be able to give a correct audit opinion. That is detection risk. Now, how are you supposed to answer this? See, first of all, they might ask you to prioritize these risks. So you need to understand how to prioritize these risks, and then you also need to understand how to base your materiality. So first of all, the way to write your answer, the technique to write your answer. First, we'll talk about materiality. of that particular issue that we have identified or risk that we have identified. Then we'll talk about its treatment. What is the risk? Risk is that it is not correctly treated or disclosed in the financial statements. That's what risk is. So what is the actual treatment? You identified that financial instrument in this case is a risky area. You talk about its materiality. You talk about its treatment as per IFRS 9, that this should be the correct treatment. And then you talk about the risk here. What do you think would have been wrongly treated here? How it would impact the financial statements? Assets are overstated, liabilities are understated, profit is overstated. What is the impact? Talk about that. So basically, MTR, materiality, treatment, risk, 1 mark for each. How do you know about materiality? What are the materiality thresholds? Can you tell me the materiality thresholds? What are the materiality thresholds? Come on. What are the materiality thresholds? For revenue, how do you know some issue is material? For revenue, if it is 0.5 to 1%, I say it is material. For PBT, if that particular transaction or account balance is 5 to 10%, I say it is material. For total assets, if it is 1 to 2% of total assets, then also it is material. So these are the materiality thresholds. Now, whether 0.5% or 1%, 5% or 10%, how to decide that? In your AAA paper, they will already tell you on what basis are we supposed to set the materiality. So they will already tell you that on what basis you have to base your materiality. Rather, it is on the basis of total assets, PBT or revenue. They will tell you that. But the point is, I will keep it on lower side or on the higher side. That depends upon the risk. That depends upon the risk of that company. So if the company is risky, is more risky, then the materiality will be lower. Materiality will be lower. Because more the risk, I am supposed to find more misstatements. I have to be more skeptical. So I'll base the materiality on the lower side. If the risk of the company is less, then I can base the materiality on the higher side, right? I can base it on the higher side. So basically, I am basing my materiality on the risk of the company. And how do you come to know about the risk? Because generally every company will have ROMM or an audit risk. That's not the whole thing. The point is that you should be able to find that overall this company is risky or not. Let's suppose the company is listed. So by nature, I should keep its materiality on the lower side, right? It's a listed company. So it's a high risk company because there is more public exposure. Then if that company is a new client for me, new client means I don't know this client, I have not performed work. So there might be increased detection risk because I don't know about this client. So this is high risk. Then let's suppose the client is expanding this year. Let's suppose they have entered new markets or have done some mergers or acquisitions during the year. So for that year, they become risky, right? So this is what I have to look at to decide whether the company is risky or not, and then base my materiality. Now, how I'm supposed to prioritize the various risks that I have identified? See, priority depends upon number one, priority is given to intention. You must have heard that in law also what matters is not the act, but the intention. So in law, the spirit of law is in the intent. So maybe, I do something which is lawful, but the intention is bad, then it becomes illegal. So similarly, let's suppose I have skipped a traffic light, but my intention is to let the ambulance pass. So then my rule is not broken. So our rules are also made on the basis of intention. It's by the spirit and not the law. It's about the spirit of law, intention of law. So similarly, in risk also, I have to see if there is an intention based risk. Let's suppose I doubt management's intention. Let's suppose I think that the risk here is management bias. So that becomes my high priority risk. Then how do you prioritize the risk? Management bias is your first risk. Second risk could be related to analytical procedures, because generally they are like vast, wide, okay? Then something related to governance could be there. And then based upon the materiality, based upon like, if I just give you a general thing, because it's based on judgment, they will not deduct your marks on the basis of how you have prioritized. If you have given enough logic why you have prioritized in a certain way. But generally, in the question, if they have given 7 sentences to one topic, let's suppose in 7 sentences, they've talked about financial instruments. So obviously, that topic is very important, right? That's material. So you just apply that innocent mind of yours, the student mind here, that yes, if the examiner has given so much space to a topic in the case study, so definitely it is more material. So let me prioritize that particular thing first. So this is how you will prioritize your risks of material misstatement or audit risk. That's it. So this is from the topic of audit risk and business risk. There's no theory to it. You should know IFRS. And tomorrow in the grand revision of SBR, we are going to do IFRS. So make sure you attend that also. If you don't have the time, then you can attend previous quarter's grand revision at 1.5 times the speed for SBRs. Now let's talk about how to write good procedures and evidences. They are also a very famous requirement. Audit procedures. Audit procedures. What is audit procedure? Audit procedure is basically the work to be performed, work to be performed in the process of audit. So what work the auditor performs is audit procedures. The work performed on various areas. Why do you perform this work? Why? To assess the assertions, to check whether the assertions are true or not. What is an assertion? Assertion is basically promises made by the management. This is what I mean by assertion. Promises made by the management. So what promises management makes? It makes various promises based upon the financial statement. For P&L, the promises are that whatever they have presented is true. Whatever they have presented has occurred. So occurrence is a promise. Whatever income and loss they have recorded, that is correctly being classified as revenue gain or a capital gain. They've properly classified it. They have made a correct cutoff of it. They have completely recorded all the expenses and stuff, and they are accurate. So they have also done it accurately. And their presentation is also correct, right? So this is what, with regards to P&L, we actually disclose. We actually, as a management, we actually promise that everything has occurred and is correctly classified. Its correct cutoff has taken place. It's being completely recorded. It's accurate and it is correctly presented, right? This is what we have in the statement of profit and loss. Then in the statement of financial position, right? What assertions are there? that whatever asset and liability is recorded, their rights and obligations. Their rights and obligations exist. That particular asset or liability exists. Its existence is there. It has been correctly valued. So valuation is also there. And it has been accurately recorded. So accuracy is there. And also classified correctly. Classification is also correct. So basically for P&L, we are talking about OC3 cap, OCCCAP. So basically O 3 times C cap. For balance sheet, it is REVAC, rights, existence E, valuations V, and A and C. So for P&L, it is OC 3 times cap, and here it is REVAC. So these are the assertions that we are checking through the audit procedures. Now, how do you write a good procedure? What work is to be done? We use certain verbs because work means a verb, right? Action doing word. So what work can you do? General words that you use is review, recalculate, obtain, analyze, investigate, inquire, inspect, etc. These are the verbs that we use to make a good audit procedure. See, audit procedure, for every procedure we get 1 mark. So every audit procedure is worth 1 mark. How do you make a good procedure? First, you talk about the verb. Let's suppose the question asks you, list the audit procedures for impairment of cash generating unit in the question. Now, when you're making that audit procedure list, you have to first talk about the verb. Now, when we talk about impairment is an expense. It goes into P&L. So I need to check whether that has actually occurred or not. Has it been correctly classified? Has the cutoff been correct? Has it been completely recorded? Is it accurate and well presented or not? These are the things that I'm supposed to check. So impairment IS 36, right? So I need to first check whether it has occurred or not. So I can discuss with the management because impairment occurs if there is an indicator of impairment. So I can discuss with the management if there is any indicator, external or internal, which indicator, external or internal, of impairment, to assess or to check the occurrence of impairment. Now, how do you get marks for it? The auditor, the examiner will give you mark for the verb that you have used. Okay. The procedure is to discuss with the management. So that gives you half a mark. And the reason why you are doing it, to check the occurrence of the impairment, that gives you another half a mark. Right? Then similarly, if you have already calculated the impairment, so recalculate the value in use to check its arithmetical accuracy. So that's basically a procedure where recalculate is the work to be done and value in use is what I'm recalculating, and I'm checking the arithmetical accuracy. So that's the reason. So half a mark plus half a mark, I get a full 1 mark. Similarly, you can also talk about its presentation. So what could be the presentation of the impairment? It's allocation basically. So recheck from the draft prepared draft financial statements to assess the correct allocation of impairment to the CGU as per IS 36, right? So I can check the draft financial statements to make sure that yes, they have correctly allocated the impairment. So this is how you're writing the audit procedures, right? So you are checking, you're using the verb, you're talking about the issue, and you're talking about the reason why you're doing it. So the verb plus the issue, document, or what, for example, discuss the with the management about indicator of impairment. So indicator of impairment is the issue. And then why are you doing it? Why are you doing it? Which assertion are you checking? So if you include all these things, you get full 1 mark for your audit procedure. Then you have evidence. How do you talk about audit evidence? Audit evidence. How is it different from a procedure? See, once you have performed some work in the process of audit, you're also supposed to obtain, you're also supposed to obtain the evidence that yes, the work has actually been performed. You need to collect the evidence. For example, you say physical inspection of plant and machinery to check its existence. That's a procedure. But what is the evidence that you have actually physically inspected it? The evidence would be the photographic evidence. If you went for a physical inspection of plant and machinery, go and take pictures of it and document that, yes, I did visit it. So that in future, if there is any case against you, because you're an auditor, you play a very important role in public. So if there's a case against you, you can say that I did my work correctly. I have gone to the site and physically verified that this particular asset exists, right? So audit evidence is document form of the work that auditor has performed to ensure that work was actually performed and was sufficient and was sufficient and appropriate, right? So this is the audit evidence that we have to collect. So audit evidence examples, just for like you said, recheck, recalculate the value in use. So what will be its audit evidence that you have recalculated something? Copy of auditor's recalculation to ensure mathematical accuracy, right? So copy of auditor's recalculation to ensure that yes, there was the correct calculation of value in use. So that's a good audit evidence where I'm talking about the document. I'm not talking about the verb. I'm talking about the document. I'm talking about the issue and I'm talking about the reason. So how do you make a good audit evidence? You talk about the document, you talk about the issue, and you talk about the assertion that why. Okay. So this is basically how you make a good audit evidence. Many people in their exam, they tend to confuse procedures with evidence. So if the question is asking you a procedure, they end up writing evidence. That's a very basic thing and we lose our easy marks. And honestly, procedures and evidence is such a requirement which can help you get a lot of marks. You can just pass on the basis of this if you are really good at writing procedures. Because literally more than half of your paper is made up of procedures and evidences, right? So you have to get the epitome of perfection in writing evidences and procedures. So all my students of AAA, you guys have your notes with you. Make sure that you read the audit procedures from there. For every area, we've made the procedures in the notes, right? You can read them out. But in the exam, if you know the IFRS, you can easily write the procedure. For example, I know in IS 36, I have to take lower of value. I have to take lower of carrying amount and recoverable amount. And the impairment loss goes via P&L. So I can write a procedure that verify from the draft P&L that the uh, loss on impairment was taken via P&L. So that is basically a procedure. What will be its evidence? Copy of draft P&L to ensure impairment loss being recorded correctly in the P&L. So this is how you write your procedures and evidences. That's it. So these are the basic skills you need for question number 1 with regards to business risk, ROMM, audit procedures, and audit evidences. Are we all clear on this? That's great, Bips. Are we all clear on this? Just drop a like or a comment. I would know that you are clear. Okay. Now let us take a break of another 5 minutes before we continue with review and reporting and other assignments and sustainable assurance. So after the break, we are going to do the last few topics: review, reporting, other assignments. I'm going to touch upon that. And we are going to do a very important topic, sustainability assurance. That's basically the, you know, uh, you can say it's audit of sustainable report. So that's what we are going to do after the break. So let's take a break of 5 to 7 minutes and continue with these topics after the class. Yes, guys. Let's resume with the session. Am I audible to you? Okay. So let us talk about review, reporting, other assignments, and sustainability assurance. Group audit, it is basically like group accounts. So it also comes in the form of audit risk only, right? So audit risk covers that, but group audit, specifically group accounts, that will be covered in the SBR's Grand Revision. So you can watch that for group accounts. Now let's talk about review, reporting, and the sustainability assurance. What goes into the audit report? Let's first talk about reporting. What goes into the audit report? So the name of your friend is Taub, Cora, Reed. So Reed is something that you can avoid, but what is Taub? Where T stands for title, A stands for addressee, okay, and O stands for opinion, B stands for basis for opinion, and K stands for CAM paragraph, O stands for other information paragraph, then responsibilities of management, then auditor's responsibility. This is what I have as Taub Cora, right? This is how the audit report looks like. But there will be certain changes in this audit report. For example, when I modify my opinion, I change the opinion title as that particular opinion. For example, if I've given qualified opinion, then the title will change to qualified opinion. Basis for opinion will change as basis for qualified opinion. So that will modify my report, right? So what are the kinds of opinion that you can issue as an auditor? What are the various kinds of audit opinion? Before that, I need to understand two terms, materiality and pervasiveness. You all know the threshold of materiality. That how do I determine whether some issue or a misstatement is material or not? You know the threshold of it. Then there's a second concept known as pervasiveness. Pervasiveness means that any misstatement is pervasive if, let's suppose, it is widespread in the financial statements. So any misstatement which is widespread in the financial statements. So for example, if let's suppose you were supposed to make the financial statements on the basis of breakup value basis because you were no more a going concern, but you make up on a general basis. So your misstatement is widespread because breakup value basis means that all assets and liabilities are recorded at net realizable value. So that means all assets and liabilities are misstated. It's widespread. Then if any misstatement which is a significant portion of profit slash revenue slash asset. So if any misstatement is of a significant proportion of profit, revenue, or asset, not just like 5%, 10%, but something like 60%, 70%. So that is a pervasive misstatement. Then any disclosure that you have missed, is fundamental to users' understanding. So something that was really required for you to, you know, that was really required for you to disclose so as to, users to understand the financial statements, but you have missed that. That means it's a very pervasive misstatement. Now, there are three types of opinion that you can issue. Qualified opinion, then you have disclaimer of opinion, and then you have adverse opinion. If the misstatement that you have identified as an auditor, if the misstatement that you have identified as an auditor is just material, then you issue then you issue qualified opinion. If it is like there's a lack of, let's suppose, lack of sufficient and appropriate audit evidence, that means evidence is unavailable. Maybe, for example, uh, the evidence is unavailable because uh, there was a fire in the company, there was a fire in the office, so no more evidences are available. So in that case, you give disclaimer of opinion. So there should be a material misstatement and lack of sufficient and appropriate audit evidence related to it. Adverse opinion is given whether when the misstatement is material as well as pervasive. That's when I give adverse opinion, right? So this is how you make different kinds of opinion. So this is your audit reports. You can say the format where you can give opinion, and then in the basis for opinion, you tell why you've given which kind of opinion. So what were the misstatements which has led to that kind of opinion. Now let's understand the rest of the aspects of the audit report. To understand CAM, okay, I've told you opinion and basis for opinion. Now to understand CAM, I need to understand that as an auditor, what do I communicate with TCWG? So what do you communicate with TCWG? What are the things that you communicate? Yes. What things do you communicate to TCWG? Come on, tell me. What are the things that you communicate to TCWG? We communicate, first of all, in the process of audit, before signing our audit report, whatever we find in the audit process, we communicate it. For example, first of all, we communicate auditor's responsibility so that the TCWG knows that this is what we are responsible for and this is what the management is responsible. So that the tasks are aligned. Nobody is having a, you can say, misinformation that this is the thing that we are taking care of. So you communicate auditor's responsibility. That is also a way of limiting your liability. Then you communicate planned scope, timing, and direction of audit. Okay, you let them know that these are the things that we will talk about with you. This is the timeline of audit. So we communicate to them. Then whatever significant findings we have had, significant findings. So basically, if we have found something really material, which is like a risk of material misstatement, if we have found something like that, something very important from the whole process of audit, that's what we communicate to TCWG. Then if there is any internal control weakness, internal control deficiency, right? That's what we are going to communicate to TCWG. And if there will be any recommendations that how can we actually overcome these internal control deficiencies, that's what we will communicate to TCWG as well. Then if we are facing any ethical issues, okay, that's what we will communicate, and how we have reduced them, what safeguards we have applied. Because in many safeguards, you say discuss with TCWG. In ethical issues, you say, right, discuss with TCWG. So that's the discussion that you are having, right? If there was any like lack of, for example, the management did not give some information on time to me as an auditor, that is also something I'll complain to TCWG. And I will tell them that please make sure it does not happen again, right? So these are the things you communicate to TCWG. Now, what is CAM? It is key audit matter. Key audit matter. Now, out of these things that I have communicated to TCWG, only out of these things, few issues which are considered as highest risky areas of the client by the auditor are mentioned are mentioned in the audit report as scam. So something that you've identified as highly risky area, highest risk area, that is what you communicate as scam. So basically the significant findings, like ultra significant findings that you find is like very, very important to be communicated. So you tell them that what is the key audit matter that you've identified, why do you think it is a key audit matter, and how was it dealt in the whole process of audit. That's scam. So in the question, if they give you an audit report and they ask you to critically appraise it, and if let's suppose in the key audit matter, they have written something about a misstatement. See, CAM does not talk about misstatement. Misstatement goes into basis for opinion. So that's wrong. And in CAM, we are supposed to tell what is scam, why it is scam, and how did you deal with that issue. All these things have to be reported, right? Then emphasis of matter paragraph. Emphasis of matter paragraph. That is basically a positive paragraph where you're emphasizing on something that was correctly disclosed in the financial statement. So you're just drawing the user's attention to it. So it's a positive paragraph. It's a positive paragraph. So you're basically drawing the user's attention to correctly disclosed information, correctly disclosed information / disclosures in the financial statements. And this comes after CAM. Now, this is an additional paragraph. It's not here over the Taub Cora. It's not a part of general audit report. If you add this into your audit report is modified because you have added something to your friend's name. So emphasis of matter paragraph, other matter paragraph, it's like when you're drawing the user's attention to something that is correctly disclosed in the financial statements. For example, you've correctly disclosed a related party transaction and you want to draw the user's attention to that. Then that will be emphasis of matter paragraph, right? Then you have another additional paragraph that you might end up adding, MURGC. Material uncertainty regarding going concern. So this comes after basis for opinion. This paragraph, if it is added, it comes after basis for opinion. So what is this paragraph basically about? For that, you need to understand what, going concern issue is. So there can be two things as per the IFRS. First of all, either you are not a going concern anymore, you are not a going concern, or there is a material uncertainty regarding your going concern. These are the two, you can say, outcomes or consequences. So if you are no more a going concern, what is the accounting treatment? The accounting treatment is to prepare the financial statements on the breakup value basis, right? And also give a disclosure that we are no more a going concern and the financial statements are prepared on breakup value basis. Now, further two outcomes is that you have done it correctly. This accounting treatment has been correctly applied or it is incorrect. Now, if you have done it correctly, that means there is no misstatement, but still you want to draw users' attention to the fact, as an auditor, you want to draw users' attention to the fact that this company is having going concern issues. So you will add this in emphasis of matter paragraph and you will give unmodified opinion, right? You will not give any qualified opinion or modified opinion. You will give unmodified opinion. If you have not done it correctly, if it is incorrect, if you have not prepared your financial statements on the basis of breakup value or you have not given the correct disclosure or both of these things, then it is not just material misstatement, but it is also pervasive. Not just material, but pervasive. So this should lead to what? This should lead to adverse opinion. Correct? This will lead to adverse opinion. And this is like a material and pervasive misstatement. Now, if there is a material uncertainty, not that it is proven that we are no more a going concern, but just an uncertainty. Now, the accounting treatment for uncertainty is that we have to disclose that this company is having material uncertainty regarding going concern. Now, the two circumstances are that you have correctly disclosed it or you have not disclosed it. If you have correctly disclosed this material uncertainty, what is the, you want to draw the user's attention to this uncertainty. So you will make MURGC paragraph. If you have not disclosed it properly, then it is only a material misstatement. It's not pervasive. So for this, you will issue a qualified audit opinion, right? So this is what you have for going concern problems. So MURGC paragraph comes under when there is a material uncertainty regarding going concern, which is correctly disclosed. So something that I want to draw users' attention to. So what is MURGC paragraph? Let's put it down here. Drawing users' attention to a correct disclosure made by drawing users' attention to a correct disclosure made by the management regarding uncertainties of going concern. So it's a positive paragraph. It's not related to a wrong accounting treatment, but just a drawing to the user's attention formality. That's it. Then an additional paragraph is there, that is other matter paragraph. OMP. Other matter paragraph is para related to any matter apart from financial statements. So this is a para related to where you want to draw the user's attention to any matter apart from financial statements. For example, let's suppose the previous year's financial statements were not audited. Okay, so that is another matter paragraph where you just add some irrelevant stuff if you want to. Other information paragraph, it is part of your actual, audit report format. So other information paragraph, it usually comes after CAM. So other information paragraph is related to annual report apart from financial statements. So something written in the annual report. For example, chairman's statement, board of directors statement, something like that, CEO statement, which is there in the annual report, but that is correct or incorrect. So if it is correct, if everything is correct in that information, then we place it after CAM. But if there is a misstatement, then this paragraph, it goes from after CAM to after basis for opinion. So what is the name of your friend? If we talk about the actual audit reports format, it's Taub Kora. But if I change the name, let's suppose I'm adding all the additional paragraphs. So it becomes title, addressee, opinion, basis for opinion. Then you can say that the other information paragraph, if there's a misstatement, comes here. MURGC comes here. Then CAM. Then you have emphasis of matter paragraph. Then you have other matter paragraph here. Then other information is also here if it's correct. Then responsibilities and auditor's responsibility. So the name of your friend changes from Taub Kora to Taub OM Kiom, or you can say Kiora. So the name of your friend changes from Taub Kora to Taubum Kiora. And whenever the name of your friend changes, that means the audit report is modified. Due to any reason, if the name of the friend changes, either it is because of modified opinion or it is because of an additional paragraph that I've added, that means the audit report is modified. That's it. So this is what I have in review and reporting. Are we guys clear on this? Are we guys sorted? On review and reporting? Okay. Yes, you will get this mock. Don't worry. After the class, I'll post this document in the description box. Okay. Now let's move on and talk about other assignments. See how other assignments are being assessed in your exam. You need to understand what are the other assignments. Right now, you've studied about audit, but there are more assignments which are known as non-audit services. For example, you have review engagement. Review engagement, where you basically give limited assurance. Limited assurance means that I'm just supposed to tell about whether, this is correct or not. Like I just give a limited assurance that I did not find a mistake in the particular document. So I think it is correct. Whereas in reasonable assurance, you say that it is true and fair, but these are the mistakes that I've found. So review engagement is a light form of assurance that you give. So that's also a other assignment apart from audit. Then what you have is, apart from review engagement, you have the forensic investigation. So forensic investigation is basically when you are checking if the fraud has happened in the client and you're also quantifying the loss. That's forensic investigation. Then you have the audit of, for example, you have the due diligence. So if you're planning to buy a new company, you do the due diligence of it, that what are its assets worth of, how much should I pay as a price to merge with this company or acquire this company. So that's due diligence, right? And then you have the, we also have cash flow forecast. So PFI, review of prospective financial information. So these are some other assignments which can be tested in the exam. Now, what you need to know from their perspective, which was also there in the Super 20 questions that you guys must have completed, they can ask you acceptance procedures. So acceptance procedures is same like we have for audit, right? The same acceptance procedures. You check for what? You check for resources. Like, will you be able to meet this particular assignment? So do you have enough resources to do so? Do you have enough knowledge training experience? Do you have the, you know, uh, skill set to do so? And will you be able to do it in the given fee? Will there be any ethical issue if you provide this service to the client? Because maybe this is a current audit client of yours. So can you provide this service to them or not? So these are the things that we consider before we accept any client. So this is same for these other assignments as well. Then you should know the procedures to be performed. Now see, procedures are again same. Based on what procedure you are performing, you have to majorly over here in other assignments, you conduct review procedures. You don't conduct substantive procedures. You basically obtain, discuss, analyze, inquire. You don't actually go and do physical inspection. You don't do recalculation of stuff because you do less procedures in these assignments. Okay. So you don't go over the board. You try to limit your energy and you do less procedures. So here the verbs that you generally use are obtain, discuss, analyze, inquire. So question can be, from your due diligence where they've given you the financial statements of the company that you're willing to buy. So the risk here is that have they correctly disclosed their contingent liabilities? So are we recording the contingent liabilities properly or not? And whether what they're stating is overstated or not. So these are the things that you'll work on. So they will give you a proper requirement that give us procedures for this particular thing. So just like you write procedures in audit, similarly, you'll write the procedures here. No major difference. Okay. So this is what we have. And yeah, these are the other assignments, quite same as audit, but still the thing is that you should know what each of them means. Now let's come to technical articles. There are two technical articles which are very important from AAA perspective. Okay. Number one is data analytics. What is data analytics? See, data analytics is that you have a lot of raw data and you are trying to use it in the process of audit. You are structuring the data. Now, what is data analytics? For example, if I want to do data analytics in TG Professionals, I will see that how many students are enrolling in the AAA course, in the SPR course, and I will maybe, perform some data analytics on the basis from which geography the students are coming, or, which people are generally pursuing ACCA. So these are the kind of data interpretations that I'll take out. Okay. So you'll make some comparative information. So there is a lot of unstructured data which is available in an organization, but by using data analytics tool, you can structure this data and make the data make some sense. So you can have the data make some sense. Have the data make some sense. That's what data analysis is. So data analytics tools will mean that we will put our information. So for example, you can make a customer list or you can make a invoice list, sales list, and put it into the software to analyze that. So basically that will give you some kind of interpretation. Now the risk here is that if I use the data analytics tool, okay, so if you see the risk in the data analytics tool, the point is that what if there is a leakage of data? Okay. What if there's a leakage of data? That is the major risk. So as an auditor, how can you use data analytics? You can use the data analytics to identify the risks, to identify the risky areas on which the procedures have to be performed, to identify certain trends, to identify certain patterns, certain ratios. That's what you can use data analytics for. So you should know the advantages of data analytics in the process of audit and disadvantages in the process of data analytics used in audit. So advantages is that I will be able to find or identify risky areas properly, and it will save time. It will make my audit process less risky, or you can say it will make my audit more qualitative, right? Disadvantages is leakage of data, and there may be some errors due to no human intervention. So this can lead to some kind of errors as well. So these are the advantages and disadvantages. That's the first technical article which can be asked as a direct question to you as advantage or disadvantage of data analytics. Second is sustainability assurance. Very important. Sustainability assurance. You guys remember sustainable reporting from SBR? Do you remember sustainable reporting from SBR? Yes? Do we somehow remember it? Okay. So let us understand it. Let me share my screen with you. See, sustainable reporting in SBR, we basically talk about IFRS S1 and IFRS S2, right? So IFRS S1 and S2 are basically about your, how do you, you know, make a sustainable report. So sustainable reporting is very important. Sustainable reporting, where as per IFRS S1 and S2, we make certain reports. So I will put a link in the description box related to IFRS S1 and S2. It's a short video that you can watch. But in AAA, they will not directly ask you IFRS S1 and S2. That's SBR perspective. What in AAA they can ask you is that how do you audit this IFRS S1 and S2? Because it's a newly introduced topic, right? It's a newly introduced standard. It's a newly introduced concept. Not many accountants are aware of the fact that we are supposed to make new set of financial statements or a new way of reporting where we give a lot of numbers related to various types of capital, not just uh, money terms, but also like how we are doing good to the society, to the environment, where we're giving so many disclosures. And all these disclosures are so vague. Don't you think that these are vague disclosures because of the fact that, um, you know, this is a vague disclosure? Why? Can you think why? Because, see, there's a lot of you can say how much a company has created a pollution, whether it has met the threshold or not. That is so vague. You're creating pollution not just directly by impacting the environment through factories, but also if you have more employees and they're traveling to your office, even that is creating pollution. So there are so many metrics. How do you decide? How do you disclose? How will we know about the truth and fairness of it? Right? So ISA 5, there is an exposure draft around it. Okay, that's what we are going to study, which is International Standard on Sustainability Assurance 5000. This is an exposure draft, not a published standard. Now, what is the objective of this? What is the objective? I'm summarizing the technical article for you. You can read that technical article on the website. What is the objective of this exposure draft? First of all, it is to check if sustainable reports if sustainable reports are true and fair or not, whether the sustainable reports are true and fair or not. And based on then, we have to give an assurance, because sustainable reporting is a thing now. It involves more than financial statements. So I have to give an assurance on it. It can be a limited assurance or it can be a reasonable assurance based upon the engagement, whether what is stated in the sustainable report is true and fair or not. Now, uh, it is difficult to give reasonable assurance in sustainable report. But why? It is difficult to give reasonable assurance, reasonable assurance for sustainable report. Why? See, because how a company is impacting the nature, all this is ambiguous. See, so how an entity impacts the nature. It's human resource, whether they are satisfied with their working conditions or not. What footprint do you have on the environment? Whether you're creating jobs or not. What value you are giving to the society. These are the disclosures you make in a sustainable report. What resources you have, not just human or not just financial, but also physical resources. What environmental resources do you have? Like environmental credits are there, carbon credits. Then you have if you're controlling the pollution in some way or not. How are you impacting the climate change? So these are the kind of disclosures that you have in the sustainable report, right? And all these are gray areas. All these disclosures are based on, or are you can say qualitative basis, are on qualitative basis and are gray areas and thus ambiguous. So a company or an entity can or you can say easily misstate these figures under the greenwashing concept. What is greenwashing? When you try to paint the picture of your company as green, that you're doing so much for the environment. These days, every random clothing brand says that we are a sustainable clothing brand. Then a random makeup company will say we are making organic makeup, no environmental footprint. So many people are just saying for the sake of getting an investment, having a good public image, and that's basically greenwashing. Now, because greenwashing exists, it becomes very difficult for an auditor to find whether what a entity is claiming is true or not. Now, when you are doing the, when you're doing the audit of sustainable report, you also use materiality, but here you use double materiality. What is double materiality? You see that particular disclosure that you're talking about in the sustainable report. Is it material to the organization? You see that. And is it material to the outside world? You see both the perspectives, not just one. Whether it is material to the organization or not, and whether it is material to the outside world or not. Right? That's basically how you conduct the audit of sustainable report. Then, when you are doing planning of this audit, how the planning of the audit is a difficult thing to do because it's very difficult to find risky areas here. It's very difficult to find risky areas because, see, this is first of all a new concept. Even the auditors don't have experience in this area. We need people who are like experts from the NGOs, who know about the environment. How will auditor understand carbon credits? He has studied accounting so far. You guys have studied accounting so far. Now from 2027, they are going to add something related to environment also because they've changed the paper name from SBR to business and sustainable reporting. So maybe they will add something related to that. But right now, as ACCAs, we've studied accounting only. So it's very difficult to talk about value to the society, talk about environment. We know numbers. But what about these things? We need experts for it. We need guidance or consultation from NGO experts who are working in environmental field. Right? So that's what we need. So we can say planning is difficult because auditors are new to this area. We need NGO experts or environmentalists who can tell that whether the companies, what they're stating is correct or not. So getting evidence in this area is very difficult again because it's subjective, and it involves judgment because it's not a fact, right? It's not a fact. It is a qualitative thing. So there's a risk of fraud here, basically greenwashing, that a company is overstating their footprints or they're understating their environmental damage. So there is a risk of fraud or greenwashing. And there is a self-interest. If you talk about ethics here, there's a self-interest for auditor. So maybe he does not know the audit of sustainable reporting, but he might accept the engagement just to make some extra money. So maybe he does not know the sustainable reporting, but still he might end up accepting the audit of sustainable report just to not lose a client or to make extra money. Because there is no set of such professionals which exist till date who have, the authority or the experience to audit sustainable reports. So this is the crux of the technical article, where you should know why this ED is formed, okay? So that you can get some guidance on how to check the sustainable reports, and why is it difficult to get a reasonable assurance for sustainable reports? What kind of materiality do we use? How do you do the planning, and why planning is risky? We need to use, NGO experts and environmentalists, and evidence collection is also very difficult because there is a risk of fraud and ethical issues. The auditor will have a self-interest here. And as far as opinion is concerned, reporting is concerned, it is either going to be reasonable or limited. Do we understand this? Yes. Double and bifurcated materiality are one and the same terms. They are not different. Okay. So this is the standard. And you have the technical article, which you can read. Okay. This is the technical article. General requirements of sustainable assurance engagements. So you can just go through it once, but what I have taught you, what I have just discussed with you, it's just the same thing written here with some more professional wordings. So you can just go through it once. Okay. Then comes one more topic, last topic for the day, LCE. So there is an LCE which we are going to talk about. Less complex entities. So this is a new technical article again. Very important concept, LCE. So for LCE, there is a standalone auditing standard which contains all necessary requirements to allow the auditor to obtain reasonable assurance that the financial statements of an LCE are free from material misstatement. So we are talking about less complex entities. Now, if we are doing audit of less complex entities, if their audit will become too complex, then the auditor will be too, he'll be involved in so much things for a very less complex company. So that's why we have a standalone auditing standard which contains all necessary requirements, uh, to find or to get a reasonable assurance for LCEs. Because in the audit process, basically what you want, you need a reasonable assurance that a company's financial statements are true and fair or not. So for LCE, we have a standalone auditing standard. Why we came up with this standard? What is the objective of this standard? Why we've came up with this ISA on LCE? See, it is basically a proportionate and tailored approach. So basically we are saying why to, do complex audit procedures for small companies. Let's reduce the work. So we have made it proportionate and tailored because the company size is small, its structure is less complex. So let us make it like easy for the auditor also. So we do a risk-based audit. What is risk-based audit? Where we just focus on the key risk areas for targeted procedures, which will also result in audit being less burdensome on entities. So what we'll do is risk-based audit is focus on key risk areas, which will allow for more targeted procedures and should also result in the audit being less burdensome, on entities which lack the extensive resources of a larger company. Right? So this way you are just working you're doing some work related to risky areas. And here will be less documentation because the company is less complex. So there will be less documentation as well. Now, when can ISA for LCE be used? Because it's very much manipulative, right? If a company is complex and the auditor wants to do less work, they can specifically, they can unnecessarily go for LCE. So when can LCE ISA be used? The ISA for LCE can only be used once it is formally accepted or adopted. So you have made an announcement that I'm going to use this ISA and you have disclosed it. And scope of its use is confirmed. Scope of its use is confirmed. And by the relevant regulatory authorities. How do you confirm the scope of its use? From the relevant regulatory authorities or standard setting authority. So maybe in that particular jurisdiction, they have classified that particular company as a small company. So there, if let's suppose ACCA admits that yes, this company is an LC, then you can use it. So scope of its use is confirmed from a relevant regulatory authority. So when can you not apply the LCA? So when can you use LCA? I have given you the two rules. When can LCE ISA be not applied? What are the situations when you cannot apply it? Number one, if the company is listed, no point of calling it an LCE. Number two, if it is working in a public interest, can't be an LCE. Public interest means might not be listed, but maybe in pharmaceuticals, making medicines, or making something related to food, okay, something related like which is used by public at large. Then if it is a group, something which is in a group format, then of course it is not a less complex company, right? So any one member of the group is listed if it is a group company, and any one member of group is listed. Maybe it's associate, maybe it's subsidiary, if it is listed or is in public interest, or component auditors. Okay. So if any of the group is listed or is in public interest, then if the role of component auditor is limited, if you have a component auditor, but if the role of component auditor Component auditor means there is a subsidiary and it is audited by someone else. But the role of component auditor is limited to any physical work, then it can be used. So basically, we are saying that you are a group, okay, and you have a component, but that component is being not audited by you, but audited by someone else. But that someone else, if he is just limited to physical work, then I can use LCE, otherwise I cannot. So what are the situations when I cannot use LCE? The standard for LCE, if my client is listed, I can't say that it is a less complex entity. If it is working in public interest, I can't say it is a less complex entity. If it is a group and any member of the group is listed or public interest, I can't say it is an LCE. If I have a component auditor, that means someone else is auditing the subsidiary, but then it is not an LCE. But if the role of the component auditor is limited to physical work only, like few tasks only, then in that case, exceptionally, I can use the standard on LCE. That's it. Then what are the characteristics of LCE and what are the advantages of LCE? That's what can be asked in a direct question to you. More than in the application form, there can be a direct question. So what are the characteristics of LCE? See, how can it be a less complex entity? Either it is working in such an industry or such a business model is there, which is simple. For example, drop shipping model. Now, drop shipping model means you don't have a manufacturing unit. You have a very simple business model. So, it's a less complex entity. If your regulations, let's suppose you are not having much of the regulations a company is facing. So that is also a less complex entity. Its organizational structure. Organizational structure basically means that how a company is structured is very less complex, right? So maybe you just have one boss and two team members, so less difficulty. Ownership. If there is no equity, if there is just one owner, sole proprietorship, less complex entity. It is using IT, which is like very simple, easy, not something complex, then less complex entity. Nature of finance function. So, like, what kind of transactions you're dealing in? Maybe they are not inherently risky. So, what kind of financial reporting, setup do you have? Maybe you have just outsourced it and someone else is doing it and you have a very simple company. So these are the 7 things that you look at before you classify something as LCE. Okay. Now, what are the advantages for this ISA, which saves our time to, you know, reduce the work as an auditor in an LCE? So first of all, it saves time, it saves cost, it makes audit simplified, it is motivation for smaller companies to get audit. Because you need to understand that these companies are not required by law to get audited. These are voluntarily going for the audit. So if we make their audit less complex, they will have more motivation to get it done. Okay. Then this will win the trust of the investors. So if you want to raise funds and your financial statements are audited, investors will prefer you. Same with the bank loan. Then auditor's job will be easy. That's it. So these are the advantages for the LCE ISA, right? So you do risk-based audit, you do proportionate and tailored approach, and you do less documentation. So now you know what is the objective of LCE, who can be an LCB and who cannot be an LCE. How do you decide whether it's an LCE or not? And what are the advantages of using this ISA? That's it. Are we guys clear on this? Yes. Simple. So you can, actually read out its technical article if you want to, if you're not yet clear. But just understanding the gist of it is important. You can write the theory, you understand the spirit of it, that why we have introduced LCE, because not every company is, interested to get audit, but we are just giving them a toffee or a candy that, okay, get yourself audited, it's better. Because basically, if audit is done, people trust that company more. So we are saying, okay, your audit will be simple. Don't worry, get it done. So that's why we have a separate standard on their audit. Component auditor point not clear. Okay. See, component auditor point is, let me come there. If you have a component auditor, see, if you are a group, it's okay. If you have parent and subsidiaries, still you can be an LCE. But if any member of the group is listed, then you can't be an LCE. And if the subsidiary, the subsidiary that you have, for that you have a separate auditor. It's not you who's doing the audit. That means the component auditor exists in your life. Then you can't be an LCE. But one exception is there. If the component auditor is just doing some physical work, like, just going and checking the inventory, that's a physical work, observing the inventory, not really responsible for the whole audit, then it is okay. It can still be an NC. But if the component auditor is doing the full audit of the subsidiary, then I'll say this is a complex situation. Basically, just think common sensically. If there's a component auditor, how it is not complex? I am trusting on third party. You understanding? You're trusting on a third party. So it's not a complex, it's not a simple way. There are rules related to how to trust a third party. How can you trust them? You need to check their ethics, you need to check their knowledge, training, and experience, you need to check their qualification. Then it is no more less complex. It becomes complex. Okay, slightest inconvenience makes it complex entity. So that's what we are saying, that if a component auditor exists and his work is more than physical work, then it can't be an LC. Okay, yeah. So that's it. For our grand revision, guys, we have covered literally all the basic theory questions, the answer writing techniques. Okay. So now, guys, what you should do in the last few days. What you should do for the last few days. You guys have your notes, right? You should be reading the notes only. So last 2 days, you should be doing no practice. I hope you have done the pre-mock by ACCA. If not, just do that. And then just read your notes properly. Okay. So AAA pre-mock by ACCA. Watch its debrief by ACCA. This grand revision is sufficient for your theory revision. Then, if you are not good with IFRS, then related to IFRS on my YouTube. Tomorrow there's a grand revision. If you don't want to put time in the live class, you can watch previous quarter's grand revision. It's there in the live section tab on 1.5 times the speed. Okay, so read your notes because theory is very important. Make sure you've given the pre-mock. Make sure you've attended this grand revision. And IFRS, if you're weak at it, watch its YouTube session. That's it. And relax. Just know the techniques to answer, be good with audit procedures, be good with audit evidence. Even if a bouncer question comes up, something that you don't know about, then of course, you can apply your common sense there, pick up the keywords, explain the keywords, and try to bridge the gap between the keywords. So if they ask you, what is data analytics and what are the advantages of data analytics? Maybe you don't know about it, but you can try to give the answer that what possibly data analytics would mean, right? So try to think good. And when you're doing application based questions, stay ahead, think ahead, be holistic. If you find an internal control weakness, Don't just stick to that weakness. Talk about its possible fraud. Talk about its impact on other controls as well. What does it reflect? That the company is non-serious about their controls. So there is a possibility that the, control risk and fraud risk is high here. So think holistically, think better, be professionally skeptical, and don't mess up your time. Don't mess up the time management. That's it. So these are my few tips, and that's it, which I wanted to cover with you today. I will share this Word file with you that we've prepared. You can just go through it once I post this session, like I'll close the live class. You'll find it in 5 minutes on the YouTube, the description box. You'll find this Word file. Okay. So that's it, guys. I hope everything is clear. And thanks for being here, sticking around for such a long time. We have been here almost like 4 hours. I think 3.5 hours has gone by. So awesome. And for your time management, guys, make sure you know that you are supposed to give 1.8 minutes per mark. So your question number one, okay, let me tell you. In AAA paper, when you start the exam, you are going to have a lot of information. Okay. Let me be very clear about it. That is what I have experienced as a student also. A lot of information. It can feel overwhelming. It can feel that I am not sure about the application. But you have to survive the question. Literally, you have to survive the question. Don't think about the perfection, okay? Perfection will not come. Survive the question. Get that 50. You have to think about that 50. If you start thinking about 80, 90, 100, you will panic. Just think about that 50, okay? And when you will think about that 50 mark, you will answer the easier bits first. So make sure that your format of briefing note is correct. Make sure you're getting your easy marks in introduction, materiality paragraph, okay? And then when you move on to audit risk or ROMM, just put MTR, get your easy marks of talking about materiality. So let's suppose in the case study, you identified something like intangible asset. You saw brand. Now its application might be very difficult. Write the obvious thing related to brand. Write the obvious treatment related to IS 38. That internally generated brands are not recorded in individual accounts, but they are recorded in the group accounts. How do you record them? They are also amortized. The risk is this brand is not amortized. The risk is that we have recorded the brand even though we were not supposed to record it. So maybe our brands or intangible assets are overstated. So write obvious things. Get your easy mark first. Don't take the perfect answers in the exam kit as your reference. Try to use professional words in the exam. When you say check, don't say check. Write assess. Better word. When your mind says, right, go to this place. No, it should be physical inspection. When your mind says, be alert to this situation, your word should be maintain professional skepticism here. When you want to write that this increases the risk or this is more risky, then your answer should be that due to the heightened risk. Okay. So when you pick or choose better words, professional words, that's how the things become better and better. So try to do that. A lot of information will be there, but just survive the question, get that 50 mark, do the easier bits first, write professional words, try to get your like obvious marks, be good with audit procedures. They're going to carry a lot of marks. Be good with audit evidences. Don't do an obvious mistake between procedure and evidence. That is like the worst mistake that you can do. And yeah, that's it. If you find any bouncer question, be ready to face that also. Just take the keyword from that question, explain that, and try to relate it to the case study. Worst case, what's going to happen? You will be wrong, right? But you're writing for that, at least you'll get the professional marks. So don't judge yourself in the paper. Don't mess up with your mind that, okay, what to do, I am losing, or you are creating that panic time. No. 1.8 minutes per mark means for the first question, half of the time. Half of the time means what? 1.5 hours. 1.5 hours to the question number one, right? 45 minutes to the next question and 45 minutes to the third question. So you have to start your paper with question number one, read the requirements, read the case study. While reading the case study, keep on brainstorming, okay? Keep on identifying audit risk, make a heading of audit risk, make the heading of business risk, whatever the requirement is asking. Keep on putting information there, and at the end, change your rough brainstorming in the word processor into full-fledged answer. Make sure you do the brainstorming also. Make sure you do the brainstorming also in the word processor, so that if the time is not left, and let's suppose for 1 or 2 points, I have done the brainstorming, but I've not written the full answer, I still get marks for the brainstorming, right? This is how you make sure that I've written something about everything, right? Okay. If you have done all the questions in the ultimate planner, that is a super, super good fact. No need to do them again, just the notes. How many marks for reading and planning? Okay, how many minutes? Okay. See, there's no such limit to it because everyone has a different, you can say, reading pace. But the point is that we have 1.5 hours. I would suggest for reading and planning, if you could do it in 20 to 30 minutes. Because the rest of the time is going to go for your answer writing. And you also have that extra 15 minutes. I have just taken 3-hour timeline here. So what if you take you'll also have 15 minutes extra, the reading time. You can also utilize that. So 20 to 30 minutes max. Again, it's like varying for everyone. Some people, as soon as they brainstorm, they'll start writing the points also, just like we used to do in Super 20. So there's no such timeline, provided you complete the full question in 1.5 hours. Okay. The whole video of SBR. Yeah. That's again great, Swati. There's no need to do anything more. Just the notes. So no question practice is required from now. Just the notes are sufficient, provided you've covered the pre-mock of ACCA. If not, then just try that one. So that's it for the day, guys. This was our last session of the quarter for March 2026. I hope it was a helpful session. I wish you all best of luck, and I hope you all pass with flying colors. And we don't see each other again for the classes, okay? But we do stay connected on my YouTube channel and on the other social media handles, so that I keep a check on the students who, they pass out, and they always, we keep in touch. So I hope we keep in touch for that reason and not for a reset. And all the very best. I know it's a difficult nut to crack, but you all can do it. You have done so much of work. I know it's not easy because the timeline given to us is very less. Some of you are working, you have families to manage, kids to manage, but still you are so strong that you're doing it. So just trust yourself, trust your God. Okay, it's the holy month going on for some. Ramadan is going on, right? So just trust your God, okay, and be, like in that relaxed mode. In that worst cases that we might have to redo it. That's the worst. Okay, so even if we face the worst, it is not going to be a big problem for us. Maybe a financial loss, but that's okay. There are so many losses people bear in the when we are on earth. There are so many losses we bear. We have to bear the loss of life also. So this is a very bare minimum loss. It should not get on your nerves, not cause anxiety, stress to that level that you're not able to bear it. So you need to understand, okay, that this is going to pass. and we are going to enjoy. Just think about whenever I'm anxious about something, I will give myself a treat. So when I was taking your Super 20 sessions, I was like, oh, back-to-back sessions. And then I said, I'm going to give myself a travel break. So you also think about that. Once the paper gets over, where are you traveling to? Keep that in front of you so that you can get through this. When you know that the next day or day after the exam, I'm traveling, or I'm going to go for a movie, or I'm going out on a date, you're going to feel good. You'll distract yourself from the stress of study, and then you'll be like, I just want to get through this. You will not take that so seriously that your life depends on the paper. So just think like that, and I'm sure you'll get through. So all the best, guys. May God bless you all and stay connected. And if you like the session, just share it with your friends and drop a like on it and a comment on it once it's posted. And after it's posted, I'm going to put the notes in the description box. So that's it. Goodbye, guys. Good